most vulnerable.
Much of the world is moving on now as the AstraZeneca CEO, with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market's down 0.75% on the S&P, and the Nasdaq 100 down 1 full percentage point. Europe's struggling here with the tensions over Ukraine. We pull back in Paris. In Frankfurt, on the DAX, we're down by more than 3%. On the CAC 40, a similar amount. In the FX market, euro-dollar negative 0.4%, 113 just about holding on to a 113 handle. Some strength, Tom, where you'd expect there to be some strength to be. The Swissy and a Japanese yen.
Yeah, the tension's there as well. John, you got to look at 210 spread. I mean, I'm sorry, that's like the bond litmus paper. If you, it's sort of like the Dow, John. It's just sort of. I
would not compare that to the Dow. At all. I think we should be watching it. Hence why I would not compare it to the Dow. 210s with a break of 40, Tom, a little bit earlier this morning in the session. A break of 40. We were at 90 the first week of this year.
We had 39 handle as well. Lisa, I just love getting John.
I was going to say, I can't believe that he actually allowed himself to get triggered by that. I mean, it was so obvious.
I just want to get the tone of the show right for the week we have ahead of us.
It's a very important.
Thank you.
As well. Right now, the VIX 30.82, the Dow down 238 points as well. Joshua Sharfstein with us, Vice Dean of Johns Hopkins Bloomberg School of Public Health, and decidedly it is a better America when we look at the statistics of this pandemic. And yet, there was work from the office, and Joshua Sharfstein on a meeting that Mr. Macron had with Mr. Putin there at a table 20 feet apart because Mr. Macron wouldn't take a test, et cetera, et cetera. How close are we to work from office, or are we going to be 20 feet apart forever?
Well, I think we can, see that the Omicron wave is starting to subside. It's not gone. The number of hospitalizations is still very high. The number of cases is still very, very high. But it is going down quickly. So I think in a few weeks, hopefully, we'll be in a much, much better place. And I think that, as those cases and hospitalizations go down, we'll be able to do more and more. At the same time, we should be pressing forward, still trying to find the people who are unvaccinated, supporting them with boosters and all the rest. So there's still a lot of work to do, but I think we're on the right road. I mean, I'm teaching in person this term.
Good. There was an article, I'm going to say Friday, if not Thursday, on the quality of older people and deaths. And I was surprised how the booster is so important. Reaffirm on a Monday morning with all this good news, the efficacy, the importance of the booster shot.
Absolutely. The evidence is very strong for cases as well as for hospitalizations, particularly for older people. Booster really does help. And so, if people are on the fence about it, do they need it? Given the virus that's out there, I would very much encourage them to make those plans today.
Dr. Sharfstein, a lot of people are sick of hearing about COVID. They want this to be over, and frankly, they're acting like it. I mean, Macron, Putin might have been at a table 20 feet away, but certainly people in bars are not, and you see that across the nation. How much are we heading toward a 1918 flu pandemic, fourth wave, that nobody talks about, where people do get sick, people do die, but nobody wants to hear about it because people have already moved on?
Well, I think there's this cartoon of people, in a crowded restaurant saying, like, I can't believe we can't get back to our lives yet. There are people who are still, doing the things that they were doing before and complaining that other people are being extra careful for themselves. And, I hope that we can come to a bit more of a consensus, a little bit more of a consensus. I realize it's hard that, we should be watching that wave come down and scaling up our activities on the other side and not just throwing caution to the winds. If you go back to the beginning of this pandemic, every time the curve goes down, people go like, I'm so glad it's over, and it's just like, how many times we have to learn this lesson? We will, and we are doing a lot more than we have before. We just have to, be thoughtful about it.
Well, but Joshua, people point to the ratio of hospitalizations and deaths to the number of cases, and that ratio has declined. If you look at the number of actual deaths, it's declined dramatically versus the people who actually contract the virus. At what point is that a determining feature, that basically this is like the flu, or it gets down to an illness that really is routine for people rather than something that has a much greater mortality rate?
Yeah, well, it's probably around the time that the mortality gets to that point, but we're still at 2,400 deaths a day. So, that's not today, but it's not unimaginable. And I think it's, we're seeing that countries that are very highly vaccinated have been able to withstand the Omicron wave without nearly as many deaths as we've had. We're building, obviously, between the vaccines and infections, a lot of immunity. So I do think that we will get there, and we just have to, watch the indices and take smart steps along the way. I just think that we're just going to prolong this tail if we're not able to find some ability to, have a reasonable approach to the virus for the next at least few weeks, if not months.
It's been almost the exclusive focus of the healthcare industry community for the last 2 years now, Doctor. And as you know, there are other issues that are becoming a bigger concern, particularly for young children with speech development delayed. You can think of the psychological issues as well. Just how big is the hangover going to be, sir, for you and for others working in the industry for the next several years, maybe even longer?
I agree that there's going to be an enormous shadow cast by the pandemic. And I'm a pediatrician. From children's perspective, what's happened with their education is huge. Many kids have fallen behind on their own immunizations. It is going to be an enormous catch-up period. And that's why I think it's very, very important for this country to invest in kids. They have sacrificed, in many cases, for the greater good, for the good of adults who are much more vulnerable to serious illness. And we owe them a lot. I'd like to see that child tax credit extended, for example.
Doctor, thank you. Dr. Joshua Sharfstein of the Johns Hopkins Bloomberg School of Public Health. Elisa, balance, I think, is what a lot of people are looking for now, some better balance.
Look, you're speaking to a lot of people who also have children, yours truly, and I can say personally, you do see the ramifications of this, and yet at the same time, if you look at polls, most people do not want kids in schools to ditch the masks just yet, right? So how do you create that balance, as you say, in order to protect their health while also allowing the same degree of freedom that we enjoyed when we were kids?
It's EK country after country in Europe and elsewhere moving on and dropping their restrictions quickly over the last few weeks.
It's hugely cultural, John. And I mean, in America is a larger, and maybe frankly in Russia as well, with 6,000 miles east to west. I mean, it's region to region, it's culture to culture. And we've seen that in spades. I like the idea, John, that you said there, that this extends out in many different ways. And as Lisa mentioned on inflation, I'm sorry, what we're not talking about yet is the dispersion of inflation impact. It's very different.
Tom Keene, Lisa Bramwitz and Jonathan Ferro. Your equity market down 0.8%. Tom has a lot of thoughts on your bond market. Yields in a couple of basis points, curve flatter.
Like the Dow.
A break of 192 on 10s. The relationship between the Dow and the equity market.
A full study.
Nailed that, John.
Thank you. Subhadra Rajappa of SocGen joins us next from New York. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done, uses a small sample number, and most of the time, when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The real question for the Fed is, do they want to surprise in a dovish direction?
The patience will be rewarded if they do not get aggressive here early on in the cycle.
I would like them to just get on with it. Let's do 50.
They've been going 85 miles an hour in the left-hand lane, and they need to catch up, and they need to catch up quickly.
We actually think that the Fed comes into this year like a hawk and leaves this year like a dove.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Geopolitics gripping this market from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. TK, we're down 7/10 on the S&P. On the NASDAQ, we're down 9.
A jumble into retail sales here later in the week, John, but on equities, bonds, currencies, commodities, the most information's in the bond market this morning, and I'm looking at the 2-10 spread, John. Flattening is in vogue.
Risk aversion, Tom. Equities down, yields in, curve flatter. Goldman this morning, Christian Miller-Glissman saying, go to cash. Just a little bit. I want to go through this call with them, Tom. Still overweight equities and commodities, underweight bonds, but upgrading cash to overweight and downgrading credit to underweight over 3 months and 12 months. Cash becoming an asset class again, Tom.
Everybody recalibrating here into March. John, I loved what you said a couple years ago. The year starts in March. Boy, with a vengeance, do you see that this year as well. I'm not going to go over the strategy changes, but I will say, John, you're going to see a ton of people adjust.
The geopolitics, Lisa, in many places at the epicenter of this.
If the year is just starting and it's March now, I don't want to be here for the rest of the year because it will be the longest year in history, Tom. That's all I can say.
Yeah.
Honestly, the geopolitics, to me, it's really interesting to see that it is a risk aversion and that, frankly, bonds are bid. What is the message from the idea that long bonds in the United States are bid at a time when people are talking about entrenched runaway inflation? The flip that you saw last week, to me, is indicative of a market that people cannot and will not abandon, despite some of these really dire calls.
Well, what do you make of crude back in a way, Lisa? Brent 94, down 0.4, WTI 92, down around about 0.4% as well.
People are wondering, frankly, whether people have priced too much into the Ukraine-Russia conflict. There was a Deutsche Bank survey that came out, and it actually, just in all fairness, was completed before the late February statements about, late Friday statements about a possible conflict imminently. Only 7% of respondents thought that the Ukrainian-Russian conflict would have longer-lasting effects in the market.
Crude right now down 0.4%. Equities down And down hard on the Nasdaq in Europe, even more so. We're down on the Nasdaq by 1%, on the S&P by 0.8%. Underperformance in Europe. They missed the downdraft late Friday afternoon. We're down in Frankfurt, Germany by 3.2%. In Paris, France, we're down 3.5%. Yields come in 2 basis points on 10s to 191.64. The euro's weaker. Lisa, the Swissy stronger, the yen stronger. Euro dollar 113.08.
So how much is being priced in right now to the market with respect to this Ukraine potential conflict with Russia? Today we do hear from German Chancellor Olaf Scholz, who's heading to Ukraine today and then to Russia tomorrow. How much can they avoid some sort of crisis, particularly with natural gas spiking on the heels of the increasing conflict? This to me is really a conundrum. You've got Mike Wilson saying that this could be a polar vortex for risk assets, particularly for stocks. And you've got other people saying this is a short-term risk that seems to be consensus in markets. 11:15 a.m. we hear from ECB President Christine Lagarde. She's going to be addressing the European Parliament. How much do we get some sort of walk back of what she said last week? And frankly, a continued sort of pushback on the market pricing. We've already repriced a little bit to pushing back when they might raise rates for the first time. However, John, do they want to give a little more discomfort to bond markets that had been quiescent in the face of a lot of their dovish commentary? And then 11:30 a.m., the Fed's Board of Governors is holding a routine meeting. I am really interested to hear what they say about the yield curve, in particular the fact that you have seen this sort of bringing forward of a potential recession risk. And also Mary Daly's comments over the weekend, San Francisco Fed president, saying that abrupt and aggressive action can actually have destabilizing effect on the very growth and price stability we're trying to achieve. So what I favor is moving in March and then watching, measuring, being very careful about what we see ahead of us, and then taking the next interest rate increase when it seems the best place to do that. Has the market in the U.S. gotten ahead of itself as it prices in perhaps a recession risk? The flattest 210 spread going back to April of 2020, John.
Lisa, the tone of that interview was really interesting too. I don't know if you actually got to watch it on CBS over the weekend, but she was very relaxed when she was talking about some of these issues. That didn't sound like someone who was panicked at all by what was happening.
I think that was deliberate, because honestly, how much is she also pushing back on Jim Bullard's concern that frankly accelerated the sell-off that we saw in markets after that CPI report? How much was she trying to say, look, we have to be balanced at a time when the risks are on both sides, and you have people saying we're moving too fast and we're going to break the market as a 210s yield curve seems to be at least raising the alarm of.
Let's get to the bond market talk. We can do that with Subhadra Rajappa, the head of US rate strategy at SocGen. Subhadra, I don't expect you to have a crystal ball on things associated with geopolitics, risk and military exercises. What I'd like to do with you is try and understand how negative developments in, say, Ukraine would influence central bank and central banking policy from your perspective. How do you think it would?
I think it does play a factor because of the fact that you don't want to be seen as aggressively hawkish or raising rates too fast at a time when geopolitics is a key concern. I mean, to me, really, the key indicator is the 2-cents part of the curve. That's at around 40 basis points. So really, any sort of more hawkish rhetoric, if anything, is going to flatten the curve because you're going to see this sort of flight to quality, bid on the 10-year. So again, I've said this many times before. I think the last thing the Fed wants to do is to raise policy rates too aggressively, flatten out the curve, and lead to a recession. I think there's a lot already baked into the bond market right now. We're pricing in 6 rate hikes by the end of the year, 5 of which are delivered before September. So that's a very aggressive policy path already. So I just don't think you're going to get much more of a hawkish tone from the Fed. They're going to be very, very cautious, especially with the Ukraine situation.
Subhadra, what happens in Ukraine will influence the decision of the ECB in a different way. The spillover to the European economy will be very different compared to, say, the US. How would you expect the yield curves in, say, Germany and Italy to develop off the back of those stories?
So far, we've seen sort of a steepening of the yield curve in Europe because of Fed hike, ECB hike expectations getting priced into the market. I think that they're in a very tough situation with oil being a key issue and Ukraine, in their backyard. You're going to see some of the rate hikes getting priced out of the market, I would think, if the Ukraine situation gets worse, because, natural gas is a very important, issue for them. Energy prices have gone up quite meaningfully. Again, the ECB, again, doesn't want to be punitive and sound very hawkish at a time when geopolitics is is front and center, especially because of the fact that I think higher oil prices are going to eat into consumer spending, not just in Europe, but also in the U.S. So I think central bankers are very aware of that.
What is your view of this distinction between a flat curve, 2s10s equal yield, or maybe, 10 basis point spread, whatever, and an inverted curve? What is the difference between those two for markets?
Well, there isn't really much of a difference per se, right? If at these levels, you're 40 basis points away from being close to zero or inverted. So we're really watching the curve very, very closely to see what signals we're getting. Typically, a flattish curve or an inverted curve is going to lead to a slowdown in growth in about a year's time or 2 years' time. In past Fed rate hike cycles, you tend to see that the Fed hikes rates, well past inversion. In the last two cycles, in 1999 as well as in 2005, they hiked rates by 1.25% to 1.5% after the curve inverted. This time around, I think they're going to be very, very cautious. They're looking at the signals from the yield curve to make sure that they don't tighten policy too fast and slow down the economy, especially since the recovery is still very fragile. You're looking at a first quarter where growth is going to be quite meaningfully slower. You're looking at perhaps a weaker retail sales number because of the Omicron variant. So under those circumstances, I think the Fed's going to be, very cautious when it comes to policy, and policy is going to be very measured.
Is this environment, however, Subhadra, getting more concerning for credit?
Yeah, definitely. I think you're starting to see credit spreads start to widen. You're seeing, the fact that the Fed is going to be stepping away from the market, especially asset purchases. It's going to be less supportive for interest rates in general. And the talk is that, there's going to be a pretty decent, rapid unwind of the balance sheet, sometime starting in June or July of this year by the middle of next year. So again, the policy accommodation being removed from asset purchases is going to impact both, treasuries as well as credit products, broadly speaking.
Subhadra, thank you. As always, Subhadra Rajapatha of SocGen on a flatter, perhaps maybe even inverted yield curve further down the road in 22. 3 lessons from markets. Bramo out with her weekly column over the weekend, released yesterday. Lisa, available on Bloomberg.com and, of course, on the Bloomberg Terminal 2. The lessons of the market action of the last week, what are they, Lisa?
Basically, you've got a lot of people coming out and saying that inflation is becoming more entrenched, is concerning, is going to accelerate in a way that we have not gotten used to and have not seen since possibly the 1970s. And yet the market consensus right now continues to be quite the opposite, that we're heading right back to where we were before, but the path is going to be a lot rougher. And I find this compelling. The transitory argument is the conviction right now in markets, despite the fact that it's been abandoned by the Fed, at least verbally, and despite the fact that you have a growing number of big thinkers coming out and saying they do see something very concerning and very different than what they've seen in the past.
The big change that we've seen, I think, Tom, in markets in the last couple of weeks is just how much quicker people think the Fed will move. Earlier, that was a story that shifted in the last 2 months. Quicker is the shift of the last few weeks. The ultimate destination, though, still has not changed. What's happened is that mountain is still the same height. The trajectory to climb it is steeper. That's the change for the Fed's trajectory, Tom, for the market at least, through the next 12 months.
The evidence of the mountain on the y-axis or the timeline on the x-axis, John, is real simple. We need to see more data like we're going to see with retail sales today. I can't convey, John, that those determinants will be made through data. That's the way it always happens. No way indifferent about that.
Matt Brill is going to join us from Invesco in the next hour on this credit market as spreads start to gap a little wider and the likes of Goldman go underweight credit and overweight cash. Overweight cash because yields are higher at the front end. They're lower at the long end this morning. Good morning to you. Down a basis point or two to 192 from New York. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The Ambassador Bridge that links Ontario with the US has reopened after a 5-day protest against vaccine mandates. Stop traffic. Authorities started clearing demonstrators this past weekend before working to remove barriers erected at the site. The Ambassador Bridge handles an estimated 25% of trade between the US and Canada. Swiss voters have backed a ballot measure to protect children and young adults from tobacco advertising. Nearly 57% supported the initiative. Switzerland lags behind most wealthy nations in restricting tobacco advertising, a situation widely blamed on lobbying by some of the world's biggest tobacco companies, which are headquartered there. And HSBC Holdings plans to as much as double bonuses for some of its junior investment bankers and traders. It's a bid to catch up with rivals on compensation. The lender reportedly wants to avoid losing junior staff to other Wall Street firms who have been upping pay. More senior employees are said to be in line for bonus hikes at least 10%. And Blackstone has won its almost year-long pursuit of troubled Australian casino operator Crown Resorts. Crown accepted the US private equity giant $6.4 billion takeover offer. The deal ends a sorry chapter in Crown's history after it was found unsuitable to run its Sydney casino and given 2 years to address wrongdoing at its flagship Melbourne operation. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
A What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Earnings season continues.
This is record revenue.
Not since the 1980s have we seen these sorts of reversals.
Strong earnings put investors' Fed fears behind them for now.
Bloomberg breaks the numbers first.
A big beat for Apple. Caterpillar earnings.
Got McDonald's earnings.
An expert analysis you won't get anywhere else.
The fundamental story is really solid.
The supply chain shortage is still very much real.
It's really kind of a balancing act.
You run the risk of not holding the stock that makes its peers obsolete.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Let's hope that the diplomacy works. It's about diplomacy deterrence. Diplomacy deterrence. And the president's made it very clear. There's a big price to pay for Russia to go there.
Speaker Pelosi on ABC over the weekend from New York City with Tom Keene, Lisa Abramowitz and Jonathan Ferro. Your equity market gripped by geopolitical risk right now. In Europe, down by more than 3%. In Paris, in Frankfurt. In the States, we're down about 38 points. We're negative 0.9% on Wall Street. On the NASDAQ 100, down a little more than 1%. No drama in the Treasury market. Yields come in a bit. The curve's flatter. We're down 2 on a 10-year to 190, 198. Yields are down a whole lot more, Tom, in the bond market, with the Swissy stronger and the Japanese yen stronger in foreign exchange.
Yeah, watching Swissy more than anything. Euro Swissy nicely under a 105. That's stronger Swiss franc. And it's correlated with gold, 18.58 the ounce, up $17. And again, oil 96 down to 94 on Brent at crude. Here's what we're going to do. Emery Horton with us in Washington, The View from the White House. And joining us now from Brussels, Maria Tadeo, our Bloomberg Europe correspondent. Maria, an open question because you're so read in on this. What are you focused on in the 15 out to 27, 28 nation Europe this morning?
Well, it's the Germans. It's Olaf Scholz. This is a huge test for Olaf Scholz going to Ukraine today, but also to Russia and meeting Vladimir Putin tomorrow for the first time. This is a chancellor who's untested, who's under huge pressure, by the way. Domestically, polls continue to slip for him, and he is stuck with a huge Russia problem, but also a huge gas problem and an economic problem, because we know if there's big sanctions on the Russian economy, it's Germany that is going to hurt the most.
Well, help us here with perspective, and particularly for our listeners and viewers in America. We had World War II, and then we had basically Gorbachev allowing for the repatriation of East Germany. Great, that's a history lesson. Right now, how does Mr. Putin perceive Germany 2022?
Look, I think that is unclear, and it's unclear because it's a new leadership. When it comes to Angela Merkel, that was someone who, by the way, grew up in Eastern Germany. That was part of the Soviet Union at the time, who spoke fluent Russian, and the two of them actually had an understanding. Now, you could argue, however, a lot of the problems that Germany and Russia have, they're the making of Angela Merkel and the appeasement that she pursued for 14 years. But for Vladimir Putin, this is also a test when it comes to Olaf Scholz. He doesn't know this man. He doesn't know how far he can push him, and he doesn't know what kind of reaction he's going to get from Olaf Scholz tomorrow, who, again, Tom, it's very important to stress, he is under pressure in Germany. It's not accurate to say that Germans do not care or they do not worry about Ukraine. Public opinion has really shifted in the past 3 weeks.
Meanwhile, Anne-Marie, what is the U.S. response and, frankly, the U.S. relationship with Ukraine? How tight is that connection?
It's interesting you asked that because President Biden spoke to President Zelensky yesterday on the heels of his phone conversation with President Putin on Saturday. And the readout said similar rhetoric we've heard, swift and severe economic sanctions on Russia, and that would be economic support to Ukraine. But following the meeting, we heard from a U.S. official that this was not in the readout, that they are looking at even more aid economically to Ukraine. And also, something that was not discussed in the readout, but the Ukrainians came forthright with the information, was that President Zelensky actually invited President Biden to come to Kiev for that visit. Now, that's not going to happen when you have the U.S. begging Americans, and they did on Friday, in the next 24 to 48 hours to get out of Ukraine.
Meanwhile, have we talked about how much the U.S. may increase, Anne-Marie, its potential military budget at a time when they are talking actively about how they can better position in the case of a military conflict?
Well, sending troops to Ukraine is off the table, and that is something the president has said a number of times. But we did see the administration send another 3,000 troops to Poland. This is part of their deterrence strategy, sending more troops to the eastern flank of NATO to try to deter President Vladimir Putin. But they also did bring back a few individuals, part of the army that were in Ukraine, that were helping the military there on a strategic front. They did bring them back to America and wanted them to get out of Ukraine. What is so interesting, though, is that what President Putin does not want is a stronger NATO. And given what is happening now, that's exactly what he is getting.
Well, and that's the question, right? Because we did hear, and I'd love you, Maria, today to weigh in on this idea of Ukraine putting out there that they might potentially remove their application to NATO. What's the sort of intel on that?
Well, you know, that's a very good point, and we have to be very clear. When you talk about NATO and Ukraine, that is in the Constitution. The country made a pledge, it's a promise that they want to join both the EU and NATO. So to change that and remove it, you need to change the Constitution. For that, you need a political majority that doesn't exist. If they were to do that, the government would very likely collapse, and that would lead to very social, real problems and unrest. Because if you look at the Ukrainian public opinion, they've made it very clear they don't want to move east, they want to move west.
Maria Tadeo out of Brussels. Thank you, Maria. Anne-Marie Hordern down in Washington, D.C. That, of course, Lisa, floated by the Ukrainian ambassador to Britain in a comment to the BBC, which got a lot of attention overnight.
Look, they're in a really tough spot. They don't want a military conflict. Nobody wants a war. And if they could diffuse this really quickly, that's terrific. However, at the same time, this is in their DNA, as Maria was just saying. I just also wonder how much of this is trying to sort of thread the needle between Putin and his aggression and his desires, and keeping the support of the U.S. and Germany at a time when there is not great appetite to send troops.
Tom, what do you make of the difference between now and, say, early 2014? The amount of transparency we're getting this time around.
Huge difference. It's a really important question, John, and I don't think it's been discussed enough. Back to Catherine the Great, I'm going to guess 1753, there is a direct link of Crimea with Moscow. That's irrefutable, and there's a bunch of history in the middle 20th century and agreements where that comes under argument. This is totally different. This is about land moving from Kiev west to Lviv, in eastern Poland, that is clearly not Russian terrain. And you can argue about the path down the Donbass, down to the Black Sea. John, frankly, over the weekend, that's where my study was far more on the Black Sea, far more on what NATO will do in Romania in terms of showing the flag and building out a presence in Romania. To me, I get it that all the focus is Belarus. I'm sorry, I'm also focused on Black Sea.
Clearly some tension hitting this equity market in Europe with the DAX down by more than 3%. The equity futures look like this in America. We're down by 0.8% on the S&P. On the NASDAQ, we're down by a little more than 1%. Tons to cover this morning, of course, the fallout from the Super Bowl. Love this tweet from Sally Theta. My boomer moment wasn't the halftime show. It was not knowing how to scan the QR code last night. You scanned it, didn't you?
Yeah, I did scan it. And honestly, I was proud of myself for figuring out that bouncing QR code you're supposed to scan. And I was on an airplane.
You shouldn't scan a QR code if you don't know what the QR code is meant to be for.
What do you think is going to happen?
I'm just saying it's a good habit. It's a good habit to get into.
When you go to restaurants,
it says
they
menu.
Could be scamming you
so I don't think they're trying to. I think they're trying to give me the menu. So
you think that they would vet an advertisement?
It's a bad habit. I'm not saying they would. I'm just saying it's a bad habit to get into. That's all. From New York, this is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Suddenly, a lot of people born in the late 70s and early 80s, Lisa, feeling very old last night when they remembered where they were when their songs came out.
Got that right.
Yep, that's right.
I found the same way. I'm with you. You weren't alone. Futures this morning down 0.75% on the S&P, on the Nasdaq down 1%. Just, some group love on Valentine's Day. That's what it's all about, right?
Sensitive today, Jim.
Russell futures down by about 0.5%. Pick your poison, take your pick. We've talked about a lot of it already. Dow, where are we? Down 219, Tom, for you. We've got geopolitical risk on the one hand, you've got the inflation story on the other, that folds into the geopolitical risk, and then you've got the Fed rate story as well. So for the likes of Goldman Sachs, they pull back from 5,100 year-end to 4,900, not on earnings. David Costin making that move on valuations. And given how quickly we've moved in the last couple of months, picture this. They put out the forecast for equities. At the time they did that, for year-end this year, they were looking for 2 hikes. Now they're looking for 7. A move at every single meeting for 2022. In the bond market, here's the picture for you, the story. 2s and 10s in America, 2s and 10s in Germany. In the Treasury market, we were through 160 last week on 2s. We pulled back. Up on a session, but pulling back over the last 48 hours in this market. 152.72, that curve is flatter. In the 30s, Tom. In the 30s, that 210 spread very briefly after trading what? Yeah. Close to 90? In that first week of January, we've pulled back. That curve is so much flatter over the last month.
Yeah, absolutely. There's no question about it, John. And I would say on this Monday that there's a very nice correlation, a comfortable correlation to the market with a little bit of tension waiting for headlines on any number of stories. John, I just think because of Valentine's, we've got to show some love here.
What are you doing?
And explain why Farrow gets so upset about these indices. For many of you, you won't understand they're constructed differently. And a good way to look is Apple, which makes up 7% of the Standard & Poor's 500, 12.6% of a more concentrated NASDAQ 100. And John, I'll let you explain 3.2% of the Dow. Why is Apple 7% of one major index and 3% of the other? It's an outrage.
The market cap weighted index versus a price cap one. Is this my Valentine's present from you?
It's as close as I get. Yeah,
Thank you.
I
love you too, TK. I love you too. From the US to Europe, we can talk about the European market. Yields come in 7 basis points in Germany, on 10s down about 8 basis points. Lisa wondering how I'm still keeping a straight face. 21 basis points in Germany, we pull back. And if you look at the equity sector breakdown in Europe right now, the banks really suffering as we pull back on yields and maybe start to recalibrate the thoughts about when the ECB is going to make a move, pushing that out just a little bit. Switch on the board and finish on this. Euro Swissy. pulling back. Euro Swiss down by about 0.5%. That's a stronger Swiss franc. And curiously, and we could talk about this through the morning, crude very close to a 95. Very, very close, then coming back to 93.96, down 0.5%. That's the cross-asset price action. Let's get you some single names, some movers, and say good morning to Romain. Good morning, Romain.
Hey, good morning, John, and happy Valentine's Day to my second favorite anchor on Bloomberg Television. Keep an eye on the market. We're basically going to start the week right where we left off. Remember, last week we started off with a lot of concerns about fundamentals. That gave way, of course, on Thursday to that inflation concerns and, of course, concerns about a more aggressive Fed. And then we closed out the week with those geopolitical concerns now dominating. Tech remains on the back foot. Microsoft, Apple, Nvidia, all lower here in the pre-market, down about 1% or more, pretty much across the board. You're also seeing a lot of the travel names in this space, basically any business that has some sort of cross-border exposure, also lower. American Airlines down 1.4%. Similar story for the cruise line stocks as well as the hotels. And there is a bid to some of the haven assets into dollar, into treasuries, and into gold. Some of the gold names like Barrick and Newmont slightly higher here in the pre-market. Flip up the board, you're seeing a bid come into some of the defense contractors like Northrop Grumman and Lockheed Martin. We should point out Lockheed shares slightly higher, partly for a different reason. Their Aerojet, that Aerodyne deal that they had been planning that apparently was going to be blocked by the Federal Trade Commission. They're finally going to scuttle that deal. Also in M&A news, Splunk apparently had gotten a bid from Cisco at some point here. Based on Bloomberg reporting, we were told that those talks broke down, but nevertheless the shares now up 8% as speculation about M&A remains in that space. And Peloton shares down slightly here on the day after an interview that the new CEO gave to the Financial Times, saying that he does not plan to pursue any type of M&A for Peloton.
Romain, thank you so much. To close this afternoon and at the back end here of earnings season, we finally have headlines here into the 1 p.m. across to maybe 3 p.m. European time zones, and this from Mr. Putin as well. Going back to really the core theme here, NATO eastwards expansion is endless and very dangerous. Going back to the core visibility here of the NATO issue, and of course we talked about Mr. Stoltenberg in Romania late last week on the Black Sea, but certainly that's one of the headlines that we see at this moment, and Mr. Lavrov involved in those. We'll continue to monitor those headlines out of Russia. John, I guess I can say they don't move the market, maybe a little bit of curve flatness, but oil under $94 a barrel on Brent crude.
But Tom, the history of that line, and you're better placed than I am to talk about it, the history of that line from Secretary Baker all those decades ago, when he floated that idea of not moving an inch eastwards. And we are still debating what he meant by that, the U.S.'s side of their interpretation of that line, and just the belief by the Russians, Tom, that that was a promise. From him, it was a promise. For America, it was anything but.
Yeah, first of all, it's not our job to give an opinion on this. I'm certainly not going to give opinion on my NATO thoughts and particularly EU continental thoughts. But John, I would say that Angela Stent very much points out the complexities given from an original 15 nations out towards 28 nations. It's just more complex now than the simplicity post-World War II.
When you look at the range of arguments, Tom, is that what it's really about for Russia at the moment? Is it NATO or is it something bigger than that?
Many people, Zastanovich at CFR, again, Angela Stent at Brookings and Georgetown, all of them will say it is not just about NATO. It is way more complex, mostly about the near abroad is the phrase that's used. We'll talk about that in a moment. Right now, Jim Paulson joining from Minnesota, Chief Investment Strategist at Luthold Group on the markets. Are you building cash, Jim? Goldman Sachs is building cash at a cash time. I can't believe I'm saying this. Is Jim Paulson building cash?
Well, I wish I had, you know. We got a hot mess here. There's no doubt, Tom. We got runaway inflation, supposedly. We got the Fed, regardless of what it does. If it goes big or it doesn't go at all, that's going to be a policy mistake. We got yield curves that are flattening around the deal. Now we got a potential war coming at us and escalating, looking at $100 crude. It just seems like a real mess. I would say two things. I kind of like all the reasons to be fearful, and there's just a lot, and everyone's downgrading their forecast, and then you look at the S&P, you know, all this stuff it's facing, and it's what, is it even off 10% at the moment from its highs? It's kind of in the background holding in there, and then the fundamental backdrop here to me still seems pretty good. I still think the economy, if anything, was reaccelerating coming out of Omicron. I know it could get hit hard in parts of the world, like in Europe. There could be recessions. But here in the United States, the fundamentals remain pretty good. I'd be more tempted to try not to think what might happen the next 30 days and think more about where you might be by sometime here before the end of the year.
So, Jim, let's say you had built a reservoir of cash, or let's say you have some cash. Are you out there buying because you're looking past the next 30 days?
I would be, yeah. I mean, if you're sitting in cash, I think it's a good opportunity to be taking advantage of some of this fear as it unfolds here. You know, we also got a technical today, you know, we're dealing with. Maybe we have to go back and visit those Monday lows we did a couple weeks ago. And I would look at putting in more of the cyclical, small caps, and I would be adding to international markets. And I might take a good look at Europe if they really, you know,
oh, Jim Paulson, let's go there. Europe where? Where and what?
Well, you know, I guess my favorite still, Jonathan, is the emerging markets, ex-China. And I would be, I'm been overweight. I still am overweight there. We have recently, just this year, moved up our international weights in our my global tactical asset allocation portfolio from underweight to now slightly overweight. And I still think that the international markets are going to beat the U.S. as the year unfolds. Now, of course, that'll depend on what happens with the Ukraine situation. But I'm more worried about it seems like this geopolitical crisis has been well telegraphed and now, you know, talked about and vetted for quite a while. The more scarier ones are ones that just come out of left field. No one expects it, and you wake up some morning and oil's up $20 because there was an attack overnight. This one, I think markets have had time to digest it before the fact, and maybe that also says something about how serious it will actually occur or not. But I don't know if Europe's my favorite, but I think if it really gets damaged, I think that's more interesting. I just think international markets themselves are probably going to have a pretty good year relative to the United States overall. I still think the U.S. is going to probably see 5,000 yet this year as well on the S&P 500.
Jim Paulson sounding bullish of Luthold Group. Jim, thank you, sir. As always, it's good to catch up, buddy. Futures down 0.2. We recover a little bit here in this market. The Nasdaq down just 0.5%. Recovering in the equity market, Tom, in the US after a late-stage sell-off in Friday's session.
Yeah, we're recovering in it, and I like what Jim says there about, look, you know, how far down are we? Is it a correction, and we can go to standard deviations? And that, I'm sorry, you know, what we see here, folks, on the Bloomberg Launchpad, which is the way we look at the data, the three of us, is it just lit up like a candle, John, with the red and the green blinking. You sort of just see the pulse there, and I go to the Russian headlines because that's where you got to go. And Putin asked Lavrov if there's a chance to agree on key issues. And I mean, that's the pulse that we're following now across the Bloomberg world.
And to pick up on that, Tom, there has been a turn. So let me identify where we're seeing that turn. The equity benchmark in Frankfurt, Germany, the DAX was down by more than 3%. It's down just 2.4 now. So we're off the lows there, off the lows on equity futures, and yields are turning higher in the Treasury market as well. So just to pick on 10s, Tom, up 1, on 2s, up 5. So your yield curve is still flatter, but 2s are picking up now. 2-year yields up 5 basis points back to 155 in the last 10 minutes, TK.
Well, seeing an improvement here. The VIX under 30 gets my attention.
From New York City, this is Bloomberg.
With the First Word News, I'm Rishka Gupta. President Joe Biden told Ukrainian leader Volodymyr Zelensky on Sunday that the U.S. and its allies would act swiftly and decisively if Russia were to invade Ukraine, echoing comments he made on a Saturday call with Russia's Vladimir Putin. The U.S. says an invasion may be imminent, whilst Russia has repeatedly said it has no plans to invade. German Chancellor Olaf Scholz is set to meet with Putin in Moscow tomorrow. Hong Kong's daily COVID virus cases topped 2,000 for the first time ever, with the worsening outbreak threatening the city's COVID zero push. Health authorities announced 2,071 cases today, as well as 4,500 preliminary infections. Cases have exceeded capacity at Hong Kong's hospitals, and Hong Kong officials have asked for Beijing support, including help with its test kit supply. Pakistan is warning that Afghanistan could descend into chaos and threaten regional stability. Prime Minister Imran Khan, in a CNN interview, pointed to the U.S. refusal to recognize the Taliban, coupled with sanctions and frozen assets. Khan says foreign governments have no choice but to try to work with the group to avert a larger crisis. And the International Olympic Committee is pushing back against a ruling that allows Russian Olympic Committee figure skater Kamila Valieva to continue to compete at the Beijing Winter Olympics despite failing a drug test. The IOC says it will not hold a medal ceremony for the women's individual event if she finishes on the podium. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From New York City.
We're in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
I wouldn't be so quick to assume that we are going to see an invasion of Ukraine, right? What we can say is all the preparations are in place for a regional war in Ukraine. That's not the same thing as saying it's inevitable.
Tina Fordham of Avonhurst, and just like that, the tone in this market shifts and shifts markedly. Look at this. Futures turn positive, up 0.2% on the S&P. On the Nasdaq, up a tenth. Yields turn higher, up 2 basis points on 10s, much more so on 2s, up 6, back to 156. Crude down 1 full percentage point now to 92.20. And here's the headline, Tom, from the Russian Foreign Minister Sergei Lavrov. I would propose to continue diplomatic measures, continues his contacts with the West, says there's always a chance to agree. Yields turn higher, Tom. Equities turn higher too.
Follow on headline then. These are just headlines coming out in rapid speed, folks. Putin said, quote, all right, unquote, in response to Lavrov's proposal. That's when the markets really moved here. As John mentioned, the elasticity in the short-term bond yield is really something. Oil, yes, oil doing better from a 96 to 94. Brent crude now 93.73. And John, the backdrop here, John, I want you to bring in Maria, but the backdrop here, folks, not only are the headlines from the Russian leaders, but John, at the same time, the press waiting in Ukraine for the leaders of Germany and Ukraine. And I think it's the imagery here right now. For those on radio, it's really quite something with the German and Ukrainian flags in Kiev, John, as the story moves minute by minute.
The Chancellor Scholz meeting with the Ukrainian leader today. He'll meet with Vladimir Putin, the Russian president, tomorrow. Joining us now, Maria Tadeo, Bloomberg Europe correspondent out of Brussels. Maria, your read on the headlines so far in the last 10 minutes.
Well, it is very significant. Going into Monday, Vladimir Putin said that he wanted to speak to two people, his foreign minister and his defense minister, and then he would make up his mind. He's had a meeting so far with Sergei Lavrov, who's a very, very experienced diplomat, as you know, and Sergei Lavrov is saying we should still talk with the West. There may be a way forward. For Vladimir Putin, he's made it clear it's not da, it's a yes, we can go for it. So there's another meeting that is still pending with his foreign minister, but this one so far does show that Vladimir Putin does want to continue with dialogue. And it's also interesting because on Saturday, when he spoke with Emmanuel Macron, the French president told him, we can continue to talk, but there can be no escalation. They're not compatible. So far, you could argue this is a clear signal that Vladimir Putin is still at the table.
Well, let's talk about how the diplomacy is set up today and into tomorrow. Today, the German Chancellor with the Ukrainian leader. Maria, tomorrow, the German Chancellor with the Russian president. How important is that going to be?
Well, this is incredibly important. It's the first time that we see Olaf Scholz and Vladimir Putin meet together. These are the two countries that are the most intertwined. When you look at the European Union and Russia, it's also important because the timing, if you remember on Friday, there was a report suggesting that Russia can invade on Tuesday. On Tuesday is the day where Olaf Scholz will be physically present in Russia. So that moment in time, this date was particularly important. But it will also be important because it will really test the limits of Olaf Scholz. And Olaf Scholz will have to make a very clear signal tomorrow as to whether or not he wants to go ahead with the Nord Stream 2 pipeline, but also tell Putin we're willing to take a lot of economic pain for you to back off from Ukraine.
Maria, if we go to Diplomacy 101, which is the grace of saving face, what are the items or mechanisms for any set of world leaders to allow Mr. Putin to quote unquote save face?
Well, I think there's two areas in which they believe they can both save face. Both will say we want to be much more transparent in the way that we deal with our military. Perhaps there's areas in which we both could pull back, particularly in Eastern Europe, if you pull back your troops from Russia. And also if they are much more clear in terms of the weapons and the military exercises that they're conducting. So that's an area where the two of them could, to some extent, save face. The problem, of course, is Ukraine. When it comes to NATO, this is something that Ukraine is simply not willing to give up. So either Russia changes tone on that, or it's very difficult to see what a compromise looks like, because the Russians are clear, they believe this is a threat for them, but the Ukrainians have also made it very clear they are not going to ditch that NATO promise. This means everything for them. It's almost very connected with the identity of the country. It goes way beyond the politics.
If we reaffirm 2014 in the freshwater, or I should say warm water presence that Putin needs on the Black Sea, is that enough to save face so that Ukraine can consider joining NATO?
I would say Crimea for many, and they won't say this, but Crimea is long gone, and it's very much accepted, although it's politically perhaps not correct to say that it won't ever go back to Ukraine. I think it's more in the eastern territories where there could be some middle ground for the Ukrainians that is also problematic, because they feel like even if through the Minsk agreement you give way to diplomacy, the Russians could really take a full thing and only use it to move further into Ukraine.
So one thing that Sergei Lavrov said was that part of the U.S. response to Russia was more constructive. Do we have a sense of what that part was, what the context and what the substance was?
Look, it's not, because, and this is what really catches my eye, the United States and NATO both sent letters to Russia. Remember that. And Vladimir Putin said, I will study them and look at them very carefully. The NATO letters leaked, and we know the content of that. The United States were not. They were not leaked, and we don't know what the United States promised to Russia in those letters. So it's very interesting that Russia says, we like better what we see from the U.S. When it comes to NATO, nothing has changed. But it's also very tricky for America and the United States, because they've always said nothing will get decided on Ukraine without the Ukrainians. We don't want to repeat a Yalta moment. This is not what it is about.
Maria, thank you. Over in Brussels, Maria, today on the latest headlines out of Russia as we await a meeting with Chancellor Scholz of Germany alongside his Ukrainian counterpart. Tomorrow, Chancellor Scholz goes to Russia to meet with Vladimir Putin. And Tom, just to set the scene here, on Russian state TV, an incredibly long table, looks like something 20 feet long, with the Russian president at the one end and his foreign minister Sergei Lavrov at the other to the side, having this conversation, and the foreign minister Sergei Lavrov proposing, Tom, further diplomatic efforts, and just a simple response from the Russian president. All right.
Yeah, it's, you got to believe it's stage managed to some great extent. I mean, that's what the diplomatic cynic would say. But nevertheless, it's a move forward. And John, I would go back to what markets are responding, and we have our usual indicators. And I would say, John, that you can look at not a gloom board, but a board tightly correlated into the emotions going on in Europe, and that would be centered on Euro Swissy, Brent crude, centered on gold, which was having a buoyant day. Gold, my eyes are failing me, 1857. It's a little bit weaker in the last number of minutes, and of course you've got to go back to 210's U.S. spread, which is again a little bit better than it was an hour ago.
It's still flatter, but it's the why. Why is it flatter? It's because the front end is so much higher right now as we have a lift on the Treasury curve up 5 basis points, Lisa, to 155. Whether it sticks, I don't know, but certainly a move off the back of these headlines out of Russia.
It highlights the uncertainty, the lack of ability to price in the risks, the lack of understanding, frankly, of what Vladimir Putin's motivation is. I was looking at the implied volatility in Treasury yields. It's the highest level going back to the start of the pandemic. You take a look at some of the implied volatility. People don't know where to look next.
We'll bring you the headlines. You get to decide how to read them. The Russian President Vladimir Putin saying all right to his foreign minister's proposal to continue diplomatic efforts. This equity market turns positive on the S&P by a single point. The Nasdaq now essentially unchanged. Yields higher on the front end by 5 basis points to 155 on US 2s. From New York, heard on radio, seen on TV for our audience worldwide. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya
kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
There's a lot of dynamics under the hood. It makes sense to start repositioning portfolios.
We're not getting as much bang per buck, real earnings, if you will.
I think the equity market is obviously got a little bit of a reprieve in here.
Stocks will be still your best inflation hedge.
Our call for this year has always been more subdued market returns and more differentiation within them.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. We welcome all of you to Bloomberg Surveillance. Maria Tadeo in Brussels, Anne-Marie Horton in Washington. We're going to talk on Ukraine and Russia with these breaking headlines in a moment. John, I really think we got to rip things up here at the top of the show this morning, and everybody diving here. John, I'm seeing huge moves. The 2-year yield in the last 3 days, 27 basis points. The markets are the litmus paper of this political debate.
That was a monster move, Tom, on Thursday off the back of CPI in America through 160. Then we backed away from it late on Friday as the geopolitical risk started to bubble away. Now we start to build that yield back up by 5 basis points, getting back up, Tom, to 155 on my screen right now.
Lisa, off the gloom that we saw earlier this morning, green on the screen, S&P futures up 5, Dow -2, 300, whatever. Happy Valentine's Day, John. The Dow now up 31 points. That's the equity vol of the moment.
Honestly, to me, this all highlights how much lack of conviction there is. If you look at, for example, implied volatility, I keep coming back to this in the bond market. It's risen to the highest level since April 2020. People don't know what the bigger risk is. Is it a geopolitical potential for the downside, or is it inflationary impulse that could lead the Fed to tighten too quickly?
The best news, John, is we're not strategists. Can you imagine being a strategist right now?
So difficult. I mean, never mind a fixed income strategist in America, Tom. Imagine being one in Europe right now. You've just started to build in the idea the ECB makes a move. You're starting to look at energy prices with a threat they go even higher from here. How on earth does a central banker respond to that?
Right.
And how do you bake in any forecast for a 10-year yield and say, Germany off the back of it.
John, let's review the last 30 minutes just for those joining in across this nation. It's simple. The Bloomberg lit up like a candle. And, John, it was simple. The foreign minister of Russia made some statements, and the guy sitting to his right or left said, I agree.
He just said, all right. What a staged moment, Tom. What a staged moment to have this very, very long table with the Russian president at the one end, the foreign minister to the side at the other end, proposing to continue the diplomatic effort, and the Russian president just saying, all right, on Russian state TV. And on that moment, Tom, things flipped. That's why we've got a positive equity market, at the moment at least, on the S&P.
Let's do the data right now, John, because we got to get to Matt Brill. We can talk here of Ukraine and Russia here in about 12 minutes. Futures up 6. John, in the bond market, what's the most entrenching item right now?
I think we've got a flatter curve, sure, but what's driving it? It's the front end again. We recover at the 2-year. Yields heading back towards where they were maybe at some point last week. 160, 160-ish through last week, Thursday, Friday. Then we backed away. Now we back up again. Yields up by 4 basis points to about 154. That gets my attention. In the FX market, euro dollar recovers a bit, still negative 0.2% at 113.27. But there's your move lower on crude, Tom. 92.23. Had a little look at 95 at one point. Now it's down by more than 1%.
Right now, we've got more headlines from Russia, John. I don't know how to translate these. First, very seriously, the defense minister telling Mr. Putin of a submarine incident. We've got to get up to speed on that. But very important here, the drills are ending. And again, this goes to the Navy, John, in the Black Sea, which, as I said to Maria today, I really wonder if that will be one of the focuses.
I've got very little to go on here, Tom. The president asking his defense minister to report on the Navy and Army drills. The defense minister saying some drills are about to end soon. You read into that however which way you like. That's the headline.
Let's do this now. We're going to stay in script here. Matt Brill to join us now, head of U.S. Investment Grade at Senior Portfolio Management in Invesco. We'll go to Eurasia Group here in a minute. Matt, how does all of this diplomacy and this geopolitics fold into what Invesco's doing to manage given instabilities?
Hey, good morning, Tom. First, I just want to wish my wife a happy Valentine's Day since prices
Matt
are
Brill,
so
that
high
was
these
smart.
days. I got to take the.
That was smart.
It's Valentine's Day. Oh,
did you get her anything?
Carry on, Matt. Carry on. The state. If you want some extra time here, you take it, buddy. Especially if you stayed up all night watching that game and got in trouble. You take all the time you need.
Was there a bit of a domestic last night, Mr. Brill?
No, I just, it's a very special day. I wanted to get that out there and save a little money because, things are so expensive these days. But as far as what we're trying to do in the portfolio, Lisa's been nailing it. It's just telling you that it's really, really hard right now to figure out which way things are going to go. And that means you got to be more defensive. I think it's just really, on Thursday, you were thinking that rates were going to skyrocket to 225 on 10s. And then on Friday, everything's going back to 190 on 10s. And so I think right now, you're seeing this risk off, this let's be cautious, and everybody's talking about the Fed needing to be patient, but investors also need to be patient, figure out what's going on here. And right now, it's very difficult, and I just think it means that you need to skew more defensively.
Imagine things at a Brill household, Tom. Where are my roses? Have you seen inflation? Did you see the print Thursday, TK?
Matt Brill,
7?
you have no idea how John Farrow's third rail is 3 dozen roses in the price in New York City.
Oh, in Manhattan.
Where are we,
around
John,
this time
on
of
that?
year? I haven't even checked this year, Tom.
Which says everything you need to know.
What about me?
Just in general about
Let's get one more
Day.
question into Brill on the fixed income market before
I want
we
to go there
circle
too.
back to Valentine's
Matt, just
Day.
quickly, Matt, Goldman went underweight credit, overweight cash. Can you walk me through what your cash allocation would be, given this move we've seen at the front end, very fast, very quick, over the last few weeks?
So we have a higher cash position than we normally would for a pure corporate fund. We're trying to be in the upper single digits or up to even almost 10%. But it's not all cash. What we're starting to find opportunities in is floating rate investment grade debt, which is very similar to cash, but can actually get you some yield. So to me, that's the attractive point. We're seeing a lot of retail interest in floating rate investment grade debt as well. It's not bank loans. It's higher quality. It's investment grade. And to me, that's the area you can hang out in and get more yield while you're getting basically still zero in cash, but you're getting more in these floating rate IG products. And you're seeing 20% of the market has been issued in floating rate debt. And we keep begging the banks for more IG floaters because that's the place to be for now.
Where are we in terms of the sell-off that we're seeing in credit? I mean, I'm looking at spreads, for example, on junk-rated bonds in the United States, the highest level going back to late 2020. There is a feeling that it is just getting started. What's your view?
Yeah, so I would describe things as cheap over the near term, not cheap over the longer term. So we've certainly, backed away from the the extreme levels we had seen in 2021. But if you go back and look kind of more like the 2016 to 2018 more normalized period, we're still on the tighter end. So we think that fundamentals are very attractive, and unless the Fed makes a serious policy mistake, fundamentals are going to stay very attractive. Technicals are very challenged, though, and valuations are just okay. I would like to see us get to a cheaper level. I would like to see a little bit more clarity from the Fed, but we are getting to a point where it's starting to be, able to start nibbling on some opportunities. But I think the underweight credit is probably the right call for the next month or so. But I think as you get towards that April-May period of time where you're going to have more clarity out of the Fed, I think at that point, if valuations are at all cheaper than today, I think that's sort of your entry point to put more risk on in the portfolio.
Matt, this is such an important point. People have been coming on and saying that the Fed does not necessarily have the same threshold of a put for equity sell-off, that basically they'll allow equities to go down much more than they have in the past. And yet for credit, the story is different. Are you saying that the Fed put is much more present still for credit, and they will come in more aggressively if they see a sell-off persist in corporate debt?
I think so, but I think what's important is that what they would be worried about is somewhat of a seizing up of the market, meaning the inability for corporations to issue debt, which is what we saw in the middle of 2020 or the March of 2020. Just basically the plumbing not working. If the Fed finds out the plumbing is not working and that there's a complete risk off and that the ability to roll debt is not happening, I do think the Fed will step forward. But right now we're not anywhere close to that. Right now valuations are still kind of in the middle of the lower end of the range. And corporations are still really in good shape. And from a new issue market, which I think is the most important thing for the Fed to watch, is how easy are corporations able to borrow. The deals have gotten smaller, but no deals are really getting pulled. We're still seeing companies being able to borrow. They're just not borrowing $5 billion. They might be borrowing $2.5 billion. And that's still a sign of a functioning market. But if it stops to function, then I do think you would have some sort of Fed put.
Matt, I found a florist in New York. 1 dozen long-stemmed roses in a box, $135. 135. What's your message to Mrs. Brill? 135 for 1 dozen long-stemmed roses in a box.
Okay. I mean, it would have been 100 a year ago, right? So
unreal, Matt.
This inflation is nuts. Next year.
This inflation is nuts. The men can't get it done this year, Matt.
Oh my God.
Matt Brill of Invesco.
I can't.
Thank you very much.
Thank you, sir. Lisa, I'm just doing that just in case anyone just couldn't do it today. It's expensive. It's really, really expensive to buy flowers.
Lisa,
you're giving them a pass?
Lisa, do you remember this? This is like an annual right with John.
Don't you think they should get an inflation-like pass? I think they should.
I'm not going to go off on my tirade. So, I mean, honestly,
what is the tirade?
There are lots of ways to express your love, and
and not with roses. Well, you suggest not doing them with roses.
I'm not saying that, but it's about the expression. If the issue is that the price is too high, so you're not going to necessarily have the expression. I mean, you can still have the expression in just a different way. Maybe you come on television and you wish your wife a happy Valentine's Day.
That's what he did. I thought that was beautiful.
I know, it's inflation hedge just here. We just observed it.
Do you want to do markets? We can carry this on. I mean, we do this every year, but I'm happy to do markets too.
This is scintillating.
We've turned positive, Tom, on the S&P and on the NASDAQ too.
We have to be very careful here. There's a news flow and the vetting of the headlines that we see from Lavrov and Putin. John, we can state clearly that's what turned this market around.
Oh, without a doubt.
Yeah.
Just a couple of words, Lisa. Just all right. Just to hear all right from the Russian president.
Okay, but how much does that say? A couple of words that were highly staged, right? We're seeing information battles right now from the U.S. government and, frankly, from Vladimir Putin, and the market's falling for it every single time because there's nothing else to go with, right, as far as what the path of travel really is.
There's an argument, of course, that they don't want to validate U.S. intelligence, and U.S. intelligence implying that they'd be ready for an invasion. They've continued to deny that they are preparing for one. The market can just go on what the headlines are. The headlines are right now, the foreign minister of Russia has proposed to continue diplomatic efforts. The Russian president has said all right. The last 30 minutes sounds like de-escalation. Whether it is or not, we're going to find out, but that's what it sounds like. So the market flips to positive from negative in the equity market. Yields were lower, now they're higher by a couple of basis points on 10s, much more so on 2s. From New York, this is Bloomberg.
With the First Word News, I'm Rishika Gupta. The Ambassador Bridge that links Ontario with the US has reopened after a 5-day protest against vaccine mandates stopped traffic. Authorities started clearing demonstrators this past weekend before working to remove barriers erected at the site. The Ambassador Bridge handles an estimated 25% of trade between the US and Canada. Peloton CEO Barry McCarthy is dismissing the idea that the home fitness group could be put up for sale, pledging instead to pursue growth by doubling down on content, expanding to new countries, and increasing its product portfolio. That's according to the Financial Times. Peloton stock rallied last week after reports that Nike, Amazon, and others were evaluating potential bids. Sources tell Bloomberg that Apple is boosting pay for its U.S. retail workers as it navigates a tight labor market. Raises of 2 to 10% have been offered to some salespeople and Genius Bar technical support staff, and it comes after Apple revealed plans to offer part-time staff paid vacation for the first time, as well as more sick days and childcare benefits. And the Los Angeles Rams beat the Cincinnati Bengals 23-20 to win the Super Bowl on Sunday. The victory gives the Rams their second ever Super Bowl title and their first as a team based in Los Angeles. The Rams scored a touchdown with less than 2 minutes left in the game to take the lead. Cooper Kupp was named the Super Bowl's most valuable player. And the Duchess of Cornwall has COVID-19. That's according to The Telegraph. The Duchess, who is triple vaccinated, is currently self-isolating. The result comes 5 days after the Prince of Wales tested positive. A spokesman for the royal residence, Clarence House, government guidelines are being followed. Global News 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Season continues.
Not since the 1980s have we seen these sorts of reversals.
Bloomberg is fastest with the numbers and analysis.
The fundamental story is really solid.
It's really kind of a balancing act.
Bloomberg, the fastest numbers and analysis you trust.
I think clearly it's a significant risk, and it's one where the uncertainty is elevated, not just on whether there'll actually be an invasion, but what the Western response to that would be, and then the impact on energy prices. But with energy prices already so high and that squeezing real wages, further shocks, I think, do pose a risk. So I think, to me, it makes sense to be dialing back one's risk positions a bit, not overreacting.
Things have changed in this market in the last 30 minutes or so. Mike Bow there of JP Morgan Asset Management. Futures are just about flat on the S&P. They were down by almost 1% a little bit earlier this morning. We're down by just 19 now on the Nasdaq 100, negative 0.14%. Into the bond market, where yields climb a little bit higher on 10s by 2, a little bit higher on 2s by a little bit more, up 5 or 6 to 155. Let's call it 156 on 2s. In the equity market, the story, Tom, we recover off the back of this headline right here from the president of Russia, all right, saying all right to the proposal from the Russian Foreign Minister Sergei Lavrov to continuing, Tom, the diplomatic effort.
And after that, the diplomacy moves forward. A little bit of vacillation here, red and green on the screen. Less enthusiastic than right when that headline came out, John. And before we get to Alex Bordeaux, John, the defense minister for Russia in the chair for 9 years, General Shoigu, tells Putin of a submarine incident. That is a Bloomberg headline. And then it gets a bit opaque, John, and it has to do with, I believe, the Kuril Islands in the Pacific. I need to be very careful here, but you just wonder, John, of the theater of this along with the politics of
Well, I'll
this.
steer away from the realm of speculation, Tom, which I know you don't want to go through. Let's just look at the headline as it indicates at the moment. Some drills are about to end soon. That coming from the defense minister in response to the Russian President Vladimir Putin asking him about Navy and Army drills. He said some of those drills are about to end soon. That feeds into this idea, at least in the last 30 minutes, Tom, that things have de-escalated. Now, whether you can say that with any conviction, I think it's tremendously difficult to do. We're going off just, what, 3 or 4 headlines, 3 or 4 comments
that's what the
from
market's
Russian
doing.
leadership.
Yeah, the market's doing that with a big swing in the 2-year yield as our maybe surveillance litmus paper this morning. Alex Bordeaux, we are thrilled to have with us, practice head at Eurasia Group for so much of the continent of Europe and Eastern Europe as well. Truly an authority. Alex, what is the diplomatic construction if we choose to contain Vladimir Putin and if we choose to allow him some form of saving face? In the coming hours and the coming days, what does the West need to do?
Well, I think that the package of diplomatic efforts has to include addressing a number of the issues that Putin has brought forward, and that includes some really tough issues like Ukraine's membership in NATO. I think the comments from Foreign Minister Lavrov and Putin's assent today are a good sign that negotiations can continue, but it's been pretty clear, especially in the last week, that there's really been not much change for Putin on what issues really matter. And it's this NATO-Ukraine dynamic that I think is still going to be very important. So ultimately, they have to come to some sort of agreement or understanding on that. And that's really hard to do in this circumstance. I think, you know, the chances of a real diplomatic breakthrough have actually gone down just in the last few days.
If we stagger from Yalta to the history of, say, 1991, and then to now a new affirmation of what NATO will be, what do you and Ian Bremmer perceive the new NATO will look like?
Well, one of the interesting aspects of what's happened so far is that, in fact, because of the military threat posed to Ukraine, we've seen more cohesion and unity in NATO than we've really seen in a long time. And a lot of that's been directed at countering what has been coming from the Russian government. I think the diplomatic efforts that the U.S. has made towards European countries and NATO allied members has been notable and actually has gone fairly well so far. So we're seeing a fairly dynamic response there. I think the question is really, does that pressure then lead to some level of concession on the part of Moscow? The problem in the last few weeks is that we really haven't seen that coming from Putin.
Alex, what have the Russians achieved so far over the last few weeks?
Well, they brought the West to the table on some issues that clearly have mattered a lot to Putin over the years, and this includes Ukraine's foreign policy orientation, and it includes this issue of NATO's presence on Russia's western border. And Putin himself has kind of, noted that that he thinks that the pressure that's been brought to bear since November has actually led to that result. I think for Putin, he's still looking for some type of diplomatic win here. And that's probably going to involve something more than just getting everybody to the table. It's going to involve some level of concession, and that's where the problem is in the diplomacy.
What's his main motivation? I'm talking about Vladimir Putin's domestic agenda versus his international agenda.
I think that there are a number of security concerns that Putin really perceives need to be addressed. Now, I would question some of the underlying motivations for some of that. We heard some of it in his press conference with Macron last week, but I think that he does think that Russia faces a direct security threat coming from NATO, and that he is trying to address that. And Ukraine is kind of the focal point for that. Certainly, he has talked a lot about his views of Ukraine and its links to Russia, but I think that security matters have really come through in the last couple of months in his rhetoric.
Alex, just finally, before we let you go, of course, there is a lot of diplomacy still to take place through the next 24 hours. What are the kind of words, language that you're looking for that would indicate de-escalation, or perhaps the opposite, from Chancellor Scholz or anyone else for that matter, through the next day or so?
I think one of the words that we've heard a lot, especially coming from the Russian side, is basis. Is there a basis for having significant concrete discussions on European security? And if we start to get signals like that, I think that that would be a good sign. Unfortunately, in recent days, the indications have been that that's not where we are.
Alex Brideau, thank you, sir, of Eurasia Group, particularly for that final comment on what to look for through the next day or so, Tom, as this equity market turns positive just a little bit, because considering where we were on the likes of the NASDAQ, where we were down by 1% plus, we've recovered to unchanged on the day. And, Tom, that feels like an update, considering where we were this morning.
Yeah, and you see it again on the litmus paper. I'm looking at four things, John, and just to go to Euro Swissy, it has pulled back a little bit weaker Swissy as well. John, this is what I love when we talk to actual authorities. Away from the spin, Alex Brideau just flat out says things have gone backwards diplomatically.
Is there a basis to continue diplomatic conversation through the next couple of days, Tom, maybe even longer than that?
No, I don't know. I think the Germans have to do their tour. Who's going to be after that? I mean, is Boris Johnson due to swing through? John, seriously?
I believe the British Prime Minister speaking to the US President, Tom, through the next 24 hours at some point. So that's where Boris is at.
Come on, within the history of the continent, Macron made a tour, Scholz makes a tour. By definition, Johnson has to make a tour.
He's also got some problems at home, hasn't he, TK? That's for sure.
Yeah.
And we'll be catching PMQs, no doubt, later this week with that same tension at the epicenter of that room in Parliament. Futures right now, they recover up 0.8% on the S&P. Yields are higher. They were lower. They're up 2 or 3 basis points on 10s. They're up more so on 2s. And crude backs away from the highs overnight to 92.60, down 0.5%. Tom mentioned Euro Swiss. That was negative about 0.5% in the Swissie's favour. Now negative just 1/3%. From New York, this is Bloomberg.
estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Equity futures up 0.1% from New York City. Good morning to you all with Bramo and TK. I'm Jonathan Ferro. Futures positive as we recover off the back of encouraging headlines out of Russia, encouraging relative to where we were maybe 24 hours ago. The Russian president saying all right to a proposal from his foreign minister Sergei Lavrov to continue diplomatic conversations. Yields higher off the back of it by 3 basis points at 196.49. You'll like this one, Tom. Comes from a gentleman called Brannigan. He says the following: roses in economic terms depreciate in value, deliver extremely volatile returns, and seem to always be in backwardation when I happen to buy them. I love that last line, Tom. How true is that? You don't agree?
Yeah, that was just not going to respond.
You know that face, Tom, doesn't translate on radio. Yes. Do you want to at least convey how you feel for the people that can only listen?
I forgot it was Valentine's Day.
Does Mrs. Keane? Have you made up with Mrs. Keane? Has she messaged you at all?
There's a bit of a domestic.
How many women actually still care about Valentine's Day?
Mrs. Keane,
there we go.
Mrs. Keane.
There we go.
I mean, you can talk, by all means, talk for the whole population. By all means,
I'm just
carry
saying.
on.
No, let's move on.
Just in case Mrs. Keane's going to love this one, Tom. Lisa's going to bail you out, TK.
No, I'm just saying, it's the thought that counts. You go home, tell her you love her, make her something nice for dinner.
Did Mrs. Keane hear that? That's all that matters.
Don't know if she's watching.
That tells you everything you need to know, too.
The good news is John has a couch the size of Rhode Island, so...
You can sleep on it.
Sleep on the couch.
It is a big one.
It's a big one.
10 feet by 10 feet.
Thank you. I could get on that couch. Should we move on right now?
You should do, yeah.
Let's do this on economics, finance, investment. We are focused with Maria Tadeo in Brussels on all that's going on, the turn in the market that we've seen. Let's have a quiet and rational discussion on rates. Michael Schumacher joins, head of rates and macro strategy at Wells Fargo. He's been patient with us this morning. Michael, what is the change in the Wells Fargo strategy of what rates, of what price and yield tell us in the market?
Yeah, Tom, it's interesting. We've been bearish for a long time, and the move has been incredible. I think, frankly, it's been too fast. So with the market now pricing 165 basis points, call it, from the Fed this year, that seems too quick. The Fed may get there eventually, but this has been awfully, awfully fast. So I would say the front end probably backs up. Yields fall a little bit. You get a bit of a curve steepener in the near term. Longer term, perhaps a flatter curve, but it does seem overcooked.
On a 10-year yield, forget about the short space, on the benchmark, where's neutrality?
I would say at this point, probably taking Ukraine out of the equation. So if that somehow calms down, 220, 2.25, somewhere in there. So probably a bit of a sell-off in play for that over the next couple months.
Mike, there's a lot of Fed speak coming up. There has been a lot of Fed speak. James Bullard is speaking on CNBC right now, and people are talking about which Fed official should you be watching? Who should you be listening to?
Well, would you rather listen to Bullard on CNBC or Schumacher on Bloomberg? I think that's pretty easy.
Schumacher on Bloomberg, clearly.
Absolutely.
There's no question about it.
Okay, no, but so then,
Yes.
in all honesty, though, seriously, who's going to signal this the best when you've got Mary Daly on one side sounding like she's completely relaxed about the scene, and then you have others who are coming out with more histrionic comments?
I think it's a tough time for the Fed because you've got so many empty seats, frankly, at the governor level. So it needs to be from Powell or maybe from Brainerd. I would say if it's one of those two, really opening the door pretty clearly to 50 basis points next month or a pretty aggressive tightening cycle, you have to listen intently and focus on that. If it's Bullard, it's interesting. If it's George, it's interesting, but doesn't really carry the weight of the big two.
Meanwhile, you do have Bullard repeating this idea of a 100 basis point rate hike by the end of July. I'm just looking at this, and I'm wondering, yes, they're data dependent. What data are they looking at? If you take a look at data, it can justify anything you want it to justify.
Yeah, and it's really interesting, Lisa, because the first couple rate hikes are not going to impact inflation for a long time. Maybe it's 6 months, 9 months, 12 months, don't know exactly. But the initial couple hikes, the intention of those is to send a signal to the markets and to say, hey, we're serious. So whether it's 25, 25, 25, let's say for the next 3 meetings, or 50 and 225s, the inflationary impact in the near term is going to be the same. So in terms of data, yes, the Fed will look at the speed of the drop in inflation, but it can't really link that to the early moves on monetary policy.
We're very happy to report worldwide for you now. James Bullard and Michael Schumacher defer to the chair. They both agree on that this morning. Michael Schumacher, what's so important to me is this mystery of how Chairman Powell comes to a decision, how he takes consensus and leads it to a key decision. We knew that with Greenspan. Maybe we knew it with Bernanke, with Yellen. Do you have an understanding of how Chairman Powell acts as he moves towards key decisions?
I think the mechanics in terms of Powell, Tom, are still a bit of a mystery to me. What I will tell you is when the Fed does that first rate hike, I expect it's going to be a unanimous call. So Powell's going to round up everybody and somehow, some way form consensus. Now, after a couple of moves, you may get some dissents. We haven't had a dissent at the governor level in 15 years, but the regional presidents, Bullard, George, they might dissent, but not for the first one. Then I think it's everyone united.
One of the problems we have is a measurement of inflation. We spent a lot of time on Friday on the Cleveland median, the 16% Cleveland, taking out 8% of this, taking out 8% of higher inflation as well. How does inflation fold into your forecast? What's it come down to?
Yeah, our economics team currently has the run rate, let's say, for core CPI or PCE well above 3% at the end of the year. So looking at those numbers and thinking about even with a decent amount of fudge factor either side, that's too high for the Fed. The Fed simply can't tolerate having core inflation 3+ and declare victory. So I think it's got to go fairly aggressively to stop that, probably well in excess of 2%, but not this year.
I mean, Lisa, to me, this is great. When you were away at Chamonix, I mean, it's just so important, Lisa, to understand the heart of the matter is the year-end rate of inflation. And as Mike says, can they have a normal policy with above 3% inflation? The answer is no.
But what's the message right now from the yield curve? And Mike, I would question whether the signal there is, first of all, relevant and still somewhat predictive. And second of all, signaling that the Fed can't do as much as people think without breaking the economy.
Yeah, it's really interesting, Lisa. If you go back pre-financial crisis, a flat curve or a flattening curve foretold trouble, recession typically. But the thing is, since 2008, that link really hasn't worked. You've had central banks so active with their bond portfolios, distorting market prices. There's been a very, very weak connection. So are we super concerned about the flattening curve telling us the economy is going off a cliff? No. It's a bit of a negative signal, but it's nowhere near the danger signal that it would have been 15 years ago.
There was an interview on Friday with the Kansas City Fed President Esther George, and she was talking about using the balance sheet and possibly expediting a roll-off in order to prevent the yield curve from flattening so much. Do you think that this is going to become an ongoing conversation that we're going to hear more about on Wednesday during the Fed meeting minutes?
Yeah, the balance sheet discussion is going to be really interesting, and we think that's going to be the most telling item, frankly, out of the minutes, is how exactly does the Fed intend to go about the balance sheet effort? Is it simply going to be runoff? It can do that pretty easily in treasuries, not so much in mortgages. Is it going to be sort of a relatively equal runoff in terms of MBS and treasuries? These are great questions. I think it's going to be an ongoing battle, though, at the Fed to sort this out.
Mike, with Bullard speaking to Steve Leisman and the idea of a headline that says he needs to convince his colleagues, to me, it's almost communication run amok. I had a very important conversation with Richard Berner about this of Morgan Stanley eons ago. Is there just too much chat, whether it's Bullard or someone else, governor, president, whatever? Is there just too much Fed navel gazing?
Frankly, that's a great call, Tom. I think there is too much chatter coming out of the Fed. Probably would be better, especially around potentially a big turning point in monetary policy, if they just dialed down the volume a bit. Everyone looks at the Bloomberg calendar, says who's coming up from the Fed over the next few days. Is this person major, minor, sort of in the middle? It would be better, I think, for the markets to have less of that sort of thing.
Hey, Mike, can I just say congratulations on an awesome call on the front end on a 2-year. I remember when you said, let's get to 150, 160 in the middle of the year, and it felt like maybe we would get there. And then we got there, Mike, really, really quick. Mike Schumacher of Wells Fargo. Mike, thank you, sir. Thank you very much. Fed Go, the function on the Bloomberg. And when you go to Fed Go and you go to the events tab, listen to this. We've got Kashkari on the 16th, Tom. The FOMC minutes the same day. On the 17th, Bullard, Mester. The 18th, Evans, Williams. Out to the 22nd, Bostic, Mester. Take your pick, TK. They're all speaking through the next week or so.
The way Greenspan did it, John, maybe wasn't constructive. Lawrence Meyer had a wonderful little book, A Term at the Fed, on this. But maybe there's an in-betweeny, which is where we need to head to. I don't know. It's not that I'm exhausted by it. I always find it stimulating. But is it beneficial in the long run? I'm not sure.
The problem is when the regional Fed presidents speak so much with so much frequency, Tom, often they shape the narrative beyond where the core of the Fed is. The problem is, for me, we don't hear much from the core of the Fed anymore. Vice Chair Clarida is gone. Williams doesn't seem to be out there that much. And Chairman Powell, when was the last time he had a speech outside of the scheduled stuff?
I'll go back to 1907 and then 1912, John, where you've got this definition of presidents. The presidents and the governors aren't the same. And it's really important as a chairman comes to some form of opinion, particularly at decisive points. Who's he listening to, John? That's the real key question.
Well, we need to hear from the chairman as soon as possible.
You mentioned that earlier, dead on. Yeah.
March 16th is when the Fed makes a decision, and March 16th at the moment feels like quite a while away. Yields come in on 2s 10s to a break of 40. We've got a 39 handle now on a 2s 10s curve, and that's because at the front end we're out by 8 basis points again and getting back towards 160, Tom, just short of 158.
Well, yeah, I mean, we're moving here as well, and we've just come in a little bit. Bullard's talking balance sheet. We've barely touched on it. I think Lisa touched on it earlier a little bit. But John, I mean, away from Ukraine, there's a lot to talk about as we go to retail sales later this week.
Tons to talk about. 10's getting back towards 2%, very close, 197, up 3 or 4 basis points. 2's getting back close to 160, very close, up 7 basis points. Call it 8 now to about 158. We'll discuss all of this with Oksana Aronoff of JP Morgan Investment Management. Looking forward to that conversation in about 18 minutes' time. From New York, this is Bloomberg.
With the First Word News, I'm Rishika Gupta. Russian President Vladimir Putin is signaling there could be more talks with the US and its allies concerning its demand for security guarantees on Europe. On state television today, Russian Foreign Minister Sergei Lavrov proposed continuing talks to Putin, to which Putin responded, all right. It suggests the Kremlin will extend efforts to reach a diplomatic solution to the current tension. And a Russian court has reportedly sentenced the leader of a hacking gang to 14 years in prison. During his trial, the man claimed to have helped the country's security service back Hillary Clinton's presidential campaign. The hacker was convicted of organizing a criminal ring and large-scale fraud. A Russian investigation did not confirm his link to the Clinton hack. And Swiss voters have backed a ballot measure to protect children and young adults from tobacco advertising. Nearly 57% supported the initiative. Switzerland lags behind most wealthy nations in restricting tobacco advertising. That's a situation widely blamed on lobbying by some of the world's biggest tobacco companies, which are headquartered there. And HSBC Holdings plans to as much as double bonuses for some of its junior investment bankers and traders. It's a bid to catch up with rivals on compensation. The lender reportedly wants to avoid losing its junior staff to Wall Street firms who have been upping the pay scale. Most senior employees are said to be in line for bonus hikes of at least 10%. And Clarion shares fell the most in more than 2 decades after the company announced it was investigating allegations by internal whistleblowers that staff manipulated accounts to meet financial targets. The Swiss chemicals company says it may need to restate results for 2020 and for the first half of this year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost. So it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Foreign Minister Lavrov and Putin's ascent today are a good sign that negotiations can continue. But it's been pretty clear, especially in the last week, that there's really been not much change for Putin on what issues really matter.
Our team tries every day to get the best we can, the best and brightest. And on Ukraine, that is Alex Bordeaux of Eurasia Group, working with Ian Bremer. We spoke to him about our top risks very early in the year. Those top risks are upon us. We thank particularly Maria Tadeo for her work out of Brussels today, and we continue to monitor the many headlines from Kiev, Washington, and of course across Europe to Moscow as well. Lisa, among the Bullard headlines, maybe a recapitulation of what he said to Steve Matthews a number of days ago, but working with Steve over at CNBC. I find the one stunning headline is on growth, and growth being the debate today. On James Bullard of St. Louis, COVID, a clearing of COVID, which he alludes to, and 3.5% to 4% growth, real GDP for this year. That's really quite a number.
It is quite a number, and frankly, this is for the bulls who are actually looking at earnings and say that they see some sort of support for this kind of idea. Also interesting to see him talk about the balance sheet, which is really what people are trying to get some information on Wednesday, saying that it could be used to potentially steepen the yield curve, echoing what we heard from Esther George on Friday in an interview with the Wall Street Journal. How much are we going to start to see the Federal Reserve pare back their $9 trillion balance sheet in order to avoid this inversion, this yield curve inversion that so many people are worried about?
The market's moving from a 31 VIX down to 28, and we're now back to 3.0 on the VIX. Futures at -16, Dow futures -96 as well. So we've gone from deep red to a sprightly green, and we've come back to red and green on the screen. I really want to point out curve flattening with an explosive two-year yield. Some of the things I look at here. This is sort of the Bramo worry board. This is like the things you look at.
Hold on a second. You know, to this morning has actually been hugely instructive, Tom, and I think we better sit on this for a minute, about the dual risks here and how they are polarized, whether you've got the global geopolitical risks on one side and the potential easing of tensions there, and then the Fed as the risk on the other side. Both of them can be negative in different ways, and they're playing off each other, and it highlights how difficult it is to maneuver for traders and investors.
We will have to see in with a 2-10 spread, 38 basis points. That's something Cameron Christ looks at doing macro strategy for all of Bloomberg. Cameron, across the Bloomberg terminal, equities, bonds, currencies, commodities, what gives you the most information this morning?
Well, I think you got to look at the short end. You know, as soon as there's a moderately positive headline on this Russia-Ukraine business, short end yields jam higher again, which was obviously the big story last week, particularly on Thursday, and that kind of reversed on Friday, given some of the geopolitical stuff. But I think it kind of tells you as soon as you remove a little bit of the weight of those concerns, that the short end yield complex wants to keep pushing higher.
Cameron, there's a really important duality here. You have geopolitical risks that people fear could dampen growth globally on one side, and then you have the idea that the economy in the United States is so hot and so robust and is going gangbusters to the degree that the Federal Reserve will be forced to act well more than perhaps the economy can handle. Which is the bigger concern for you?
Oh, the latter, by a very, very wide margin. Geopolitical stuff, it's one of those things that everyone likes to worry about because there are very few real experts on this stuff, and it's sort of this amorphous sort of bogeyman in the closet. But I think that the tangible impact of these sorts of concerns is generally overstated. If I could use an example from my own career, I think it was 2006. I had a long position in this Israeli shekel. As you may recall, back then there was a brief shooting conflict between Israel and I think Lebanon. And the lesson I learned is that as soon as it started, I got out of my position. But the shekel was stronger the day before the shooting ended than it was the day before it started, which I think taught me an important lesson about how ephemeral some of these concerns are, even if these tensions actually materialize.
Although I will say that one thing that has not been ephemeral has been the price of oil. And we've seen it continue to climb regardless of whether it's because it's being driven by tensions between Russia and Ukraine, or whether it's being driven by concerns that we're not pumping enough into the resources that people really still rely on despite this greenification that seems to be ongoing. So at what point do you say this matters and it's going to reduce consumer demand and cause a weaker economy than many people are expecting?
I think we're still some ways away. And the the economy's energy intensity has been, certainly to fossil fuels, has been declining for decades, and that process has continued. I mean, in real terms, oil is still probably less than half of where it peaked in 2008. And yes, okay, that led to a recession. But there were a few other things going on back then as well that contributed. But in real terms, oil prices are still nowhere near any sort of peak that has typically put their economy into recession.
Cameron Price, President Bullard finishes up his conversation over on the Death Star with a stunning headline, which is that he would project U.S. unemployment perhaps under 3%. This is with his Missouri at 3.3%. What do the markets do, and particularly the linkage of rate markets to inflation, with a fully employed America with a 2.9% unemployment rate?
Well, to some extent, that depends on what that full employment implies for wages. If it implies more robust wage growth than we've seen already, and let's face it, it's been at sort of multi-decade highs, then the market probably has to contemplate the return of the dreaded wage price spiral, where wages go up, which increases purchasing power, so prices go up, which then leads to higher wage demands, which is what obviously we saw in the 70s.
Cameron, thank you. Cameron Price, too short a visit. A nice brief this morning here among Markets on the Move. Red and green on the screen, small caps giving some life to the markets this morning. Lisa, I don't think anyone has framed 2.9% unemployment rate in America. There isn't a single research piece I've seen that actually frames what the president of the St. Louis Fed just suggested.
We also haven't framed a modern employment market where it's 2.9%, but the participation rate is the lowest that it has been, at least if you strip out the pandemic era, going back in U.S. history. How do you look at a market where it's unclear what the slack is, how many workers are going to come back in?
Well, again, it's new territory, and again, it's something that everyone's going to have to recalibrate.
Can I just point out, if you take a look, remember Bank of America's Ethan Harris coming out and calling for 7 rate hikes by the end of this year and everyone freaking out? This is now consensus. If you take a look at the interest rate probability, it is now pricing in nearly 7 rate hikes by the end of this year by the Federal Reserve.
It's going to be interesting to see, and of course, a parsing of the data is already important. You may have heard that noise behind Lisa there. That was John Farrow just looking at the cost of 3 dozen roses delivered in the island of Manhattan. I didn't know this. Have a spiritual Valentine's Day.
Spiritual.
This is Bloomberg on radio, on television.
SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The tone shifts in a big way in the last hour. From New York City this morning, good morning, good morning. Your equity market recovers down just 0.2 on the S&P. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Ferro.
From New York City, we begin with the big issue. Geopolitics grip financial markets.
The Ukraine-Russian tension, we don't know how far that goes.
The volatility that we just got.
The Russia-Ukraine headlines.
That is going to affect the market in the near term.
A lot of nervousness in markets.
Russia-Ukraine.
It creates a dynamic in the market.
It increased uncertainty and volatility.
There's not enough conviction. There's not enough hedging ability. There's not enough mitigants to manage risk.
It's hard to be too clever. The key thing to watch in the first instance will be what happens to energy prices.
Bonds are in an interesting situation.
In and around the Ukraine situation.
It's stark, you know, what we're seeing on the ground.
You talk about tumultuous weeks. This will go down in the Hall of Fame.
Joining us now from Brussels, Bloomberg's Maria Tadeo, and from DC, Bloomberg's Anne-Marie. Maria, first to you, the comments out of Russia in the last 60 minutes gripping these markets.
Yeah, and it's very significant because, Jonathan, the reality is going into Monday, the Russian President Vladimir Putin had said he wanted to speak with both his foreign minister but also his defense minister, and then he would make decisions. Well, he's already had that meeting with the two of them, and of course, the foreign minister, Sergei Lavrov, saying that he would recommend continuing talks with the West, and the defense minister of Russia saying that some of the drills that have been problematic could be coming to an end. So all of this points to de-escalation, but it is worth noting, however, that Vladimir Putin is also trying to own the narrative here, to try to say, well, we're the ones that are working for peace, and it's the West that is creating real hysteria. So still, the troops have not been moved, and that is a real benchmark here. What is he doing with the troops? And they're not moving. They're not going backwards. They're not going forwards. The other thing that I would say we need to keep an eye on, of course, is the German Chancellor Olaf Scholz heading to Moscow tomorrow. A big conversation on energy and a big conversation around the Nord Stream 2 pipeline.
Anne-Marie, picture the scene. You saw it on Russian state TV, this long table with the Russian president on the one end and off to the side at the other end, the Russian foreign minister. That was staged. Who was the audience?
The audience clearly was a domestic audience, Jonathan, and also the reason why you have that long table is because when you have to meet President Vladimir Putin, you actually have to go into quarantine, and both of these individuals have been out working. It's interesting, in his comments, he said in Russian, "Horosho," which really translates to good. The sentiment was good. All right, I hear you, Sergei Lavrov. We will continue on the diplomatic path forward. As Maria says, it is a sign of potential de-escalation, but potentially a bit weak. And what President Putin is doing, if he's speaking to a domestic audience, with polls show that the Russian public do not want a war with Ukraine. 80% in a recent poll actually want stronger ties with the West. What he is showing to a public is, look, we are working on a diplomatic path forward. I am trying every avenue possible. That is what he is doing. I imagine the White House will have some comments. It'll be interesting to see what they thought of that show between Sergei Lavrov and also the defense minister, who we should note is very much, arguably, inner circle for President Putin. And President Biden on the diplomatic front, Jonathan, will be speaking with the UK Prime Minister Boris Johnson later today.
Maria, let's fine-tune what you'll be focused on through the next 24 hours. Chancellor Scholz with his meeting in Ukraine, then on to tomorrow with the Russian leader.
Yeah, and that is incredibly important because this is the biggest economy in Europe, but it's also the economy that has the biggest connections with Russia in many ways. They're incredibly intertwined across or as a result of the energy story. And there's, of course, the Nord Stream 2 pipeline. That is a perennial issue between the two of them. But you also have the Nord Stream 1, by the way, and the transit gas that is coming through Ukraine. And remember, the Germans said that they would compensate Ukraine for any fees lost as a result of Nord Stream 2. So this is a very important conversation, but it will be also for Vladimir Putin. This is a new German leader that's very different to Angela Merkel. Angela Merkel and Vladimir Putin had a very unique connection. She was a fluent Russian speaker. Olaf Scholz is coming under huge pressure to show that this is a different chancellor, and he's about to get much more tougher on the Russians. So this is also a test for Vladimir Putin. It's not just Olaf Scholz that has to make a big impression tomorrow.
Maria, in Brussels, AMH down in DC, to you both, thank you. And just like that, the tone shifts. All the president of Russia had to say was, quote, all right, as his foreign minister Sergei Lavrov proposes continuing the diplomatic effort. The equity market turned around. We're down just 0.2 on the S&P, and a big turnaround at the front end of the bond market too. Yields higher on twos, up 8 basis points, approaching 160 to, let's call it, 158. Morgan Stanley's Mike Wilson telling investors to remain defensive. He says the following: ignoring the extraordinary weak consumer confidence number would be a big mistake. This doesn't mean a possible Russian invasion of Ukraine is unimportant. In our view, it materially increases the odds of a polar vortex for the economy and for earnings too. Let's get to JP Morgan's Oksana Oronov, Exonic's Peter Cecchini, and Stuart Kaiser of UBS join us now. Oksana, I want to begin with you and just come to you on that line from Mike Wilson of Morgan Stanley. The odds of a polar vortex for the economy, for earnings, for energy to spike higher off the back of all of this. How are you approaching these issues at the moment?
Good morning, Jonathan. Well, unfortunately, right now, we are in somewhat of a hot mess. We're in the middle of the Fed's last policy mistake and concern about their next policy mistake. Of course, there are tons of geopolitical issues. And for bonds, particularly for credit, it's hard to see a happy ending here because, as we've seen so far this year, a rising interest rate environment does not spare even the extended sectors that usually tend to be resilient to a rising rate environment, and certainly not the most interest rate sensitive sectors like higher quality bonds. And any sort of geopolitical unrest will, of course, continue to widen spreads as well. So right now, caution is the name of the game. Being defensive is the name of the game. Cash is extraordinarily important. Liquidity is extraordinarily important. Remember, the Fed is still easing into an 8%, nearly 8% inflation environment. So as I said, we're still in the middle of the Fed's last policy error and anticipating what will they do next.
The cash position has been an important story for this program through the last week. So come back to that in just a moment. I want to come to you, Peter, and just ask you not to look at your foreign policy crystal ball, but just to tell me how you think these issues, potential conflict, would influence a central bank decision, whether that be the Fed or maybe a tougher call for this ECB.
Well, it's interesting because let's take a step back and remember the reason why the conflict in the Ukraine is so important is energy prices into Europe. And with all the discussion around it, at the end of the day, that is the most important thing to keep in mind. There are several avenues into Europe for natural gas. One is through the Baltic Sea, one is through the Black Sea, which is a big reason why the Crimean Peninsula was annexed. And the other is through the Ukraine. And so there's something of a pincer move going on by Vladimir Putin here. And if in fact the conflict continues, energy prices will continue to rise. And of course, our view here is for oil above $100, and this matters most for that, which puts the Fed in a difficult position because energy is a big piece of the inflation picture globally, as well as in the U.S., of course. And even though it says it cares only about core inflation, at a certain point, it has to care about the impact of energy prices on prices more broadly.
Bit of a catch down taking place in Europe, given it sat out what happened in the late start of the session on Friday. We're down about 2.5% in Paris. In Frankfurt, Germany, the DAX down by more than 2%. Can I come to you on that, Stu? All that money that's gone into Europe, this idea that you want to get into European equities, international stocks, given what's happening with the world economy at the moment, would you push back against that?
Push back about getting into Europe? Look, I think we've been sort of cautious in general to start the year. The Russia-Ukraine bit, our view there was it's European banks that are most negatively affected and kind of the energy sector that's most positively affected from a price perspective, at least. So our view on that hasn't changed. There's certainly a very large narrative about will rising U.S. rates and sort of pressure on U.S. tech sector, get some money back into investing in Europe. And I think we probably saw some early evidence of those flows earlier this year. So, look, our view hasn't been all that bullish on European equities, at least on a global basis anyway. But I do think that, the geopolitical stuff can certainly even slow that down even further.
Oksana, let me come back to you on that cash position. Just how big is it for you at the moment?
We came into this year very, very defensive for us. This has been really no different than late 2019, because in terms of what we were seeing with valuations and sentiment chasing yield, fixed income is fairly easy to quote unquote time that way because it's a mathematically bound asset class. So we came into this year with half of the portfolio in pure liquidity. We continue to favor very liquid, floating, high quality structures generally. And this is going to be a very volatile year, and it is the strong that will survive and generate returns. So definitely this is, so far cash has beaten everything over even the last 1 year. If you look at, across credit, any area of the fixed income market. So I think that proves that there are times when being fully invested is not the way to go, when you need to be defensive.
I'm hearing this a lot now, not just from JP Morgan Asset Management, hearing it from PIMCO, hearing it from BlackRock. The importance, Peter Cecchini, of a cash position. Goldman Sachs heard it from them in the last 24 hours. Christian Muller-Glissman saying go underweight credit, go overweight cash. Still like equities, but overweight cash. What's your response to that, Pete?
Well, I agree with Oksana and with Mike at Morgan Stanley. And as you know, we became pretty cautious of equities in late summer, particularly small caps. A cash position right now is very important. I think this is a year for active managers. We've managed to keep the duration of our portfolio very short. And we continue to prefer, well-researched, cash flow positive, well collateralized assets, especially in multifamily, frankly, John, where we do think rents are going to continue to rise and asset values will rise alongside. And importantly, I think relative to an asset like real estate, cap rates this time around, I don't think are going to rise as much as they might normally, because frankly, there's going to be this reflexivity at the long end of the curve, where if the Fed moves too aggressively, equity markets will risk off, and that will bang down the long end, which is one of the reasons why we've been in the flatter but higher camp really since October of last year.
Curve is flatter. Yields are higher. Again this morning, 40 basis points, 2s versus 10s. We broke that very, very briefly. Oksana, Peter, and Stuart are going to be sticking with us. I want to get you some movers ahead of the opening bell. About 19 minutes to go. Here's Abby.
John, lots of volatility on these shifting headlines around Ukraine-Russia tensions. We have whipsaws down and then back up. Earlier, anything related to travel down more than 2%. Now we've seen a bit of a rebound for some of the big airlines, both American and United up about 0.5%. On the other hand, the reverse for defense contractors. Earlier, Northrop Grumman and Lockheed Martin up sharply, now down both more than 1%. Down consistently, though, big tech, as all of you were just talking about, these rising rates backing up, pressuring tech once again. Apple, Microsoft, and Amazon down. That said, off of the greater than 2% low, so a little bit of a relief here for the markets, John.
Abby, thank you. Coming up, gearing up for another busy week of Fed Speak.
What I would favor is moving in March and then watching, measuring, being very careful about what we see ahead of us.
That's coming up next. This is Bloomberg.
this chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Earnings season continues.
Not since the 1980s have we seen these sorts of reversals.
Bloomberg is fastest with the numbers and analysis.
The fundamental story is really solid.
It's really kind of a balancing act.
Bloomberg, the fastest numbers and analysis you trust.
What I would favor is moving in March and then watching, measuring, being very careful about what we see ahead of us.
A host of Fed officials speaking throughout the week, with Senator Manchin calling on the Fed to get moving, saying the following: it's time for the Federal Reserve to tackle inflation head on. We all have a responsibility to do all that is possible to roll back inflation and manage our debts. The longer we or the Federal Reserve waits to act, the more economic pain will be caused. Let's get to Bloomberg's Mike McKee for more. Morning, Mike.
Good morning, John. Well, it's a week of what normally would be considered secondary indicators, but they take on new weight given the emphasis on the Fed these days. For example, what does PPI tell us about the possibility of future inflation? We will find out tomorrow. We also get the Empire Manufacturing Index. On Wednesday, retail sales. Did Americans start slowing their spending in January? There's a feeling that they did. We'll see how that translates. Import prices, of course, oil is going to affect that one. And on Wednesday as well, the Fed minutes, Neil Kashkari speaking, but it's the Fed minutes that will attract attention because people want to know what they talked about in terms of a 50 basis point move in March and the balance sheet reduction. Is there any more information on that? Thursday, jobless claims as usual, building permits, the Philly Fed, and then Loretta Mester, we haven't heard from her since the day before the CPI report came out. She wasn't in favor of 50 then. Is she now? And then on Friday, three Fed officials, Charlie Evans, Christopher Waller, and John Williams. It'll be really interesting to see Waller and Williams because they both vote, see what they are thinking should be done. Over the weekend, as you mentioned, we heard from Mary Daly. She doesn't want to be too aggressive. And we also heard from Esther George, who thinks that we don't need an intermeeting move, as Jim Bullard had suggested we might, and maybe we should sell assets from the balance sheet to move things along. So the Fed is starting to weigh in on what should be done, but so far no real change in strategy from them. Why are they not embracing Joe Manchin's argument? Well, I wanted to show you this. Inflation for 2021 was 7%. They added in not just the wages and salaries that you made, but all the money the government sent to people. And in that case, it shows that real income for Americans grew 7.6%. For the bottom 50%, 11.7%, 9% for the top 10%. Only the folks in the middle did worse last year, and they were the ones who were about the cutoff level for government aid. So it may not be as bad as Senator Manchin thinks out there.
Mike McKee. Thank you. Let's hope it gets better. That's something we can all agree on. Goldman cut their forecast on the S&P 500 to 4,900 from 5,100. The chief equity strategist, David Kostin, said this: the macro backdrop this year is considerably more challenging than in 21. Uncertainty abounds regarding the path of inflation and policy. Oksana Aronoff, Peter Cicchini, Stuart Kaiser back with us. Stuart, I want to come to you. When Goldman put out their call for 5,100 on the S&P, They were looking for 2 hikes this year. They now look for 7. That's a move on valuations, not on earnings. And I wonder from Stu whether you've thought about making a similar move for this year.
I mean, look, from our perspective, John, the risks were going to be concentrated in the front half of the year, just for the reasons you're seeing now, I think, which was, the forward growth outlook was going to be decelerating and inflation hadn't yet peaked. So, our view was that you had kind of front-loaded risks and front-loaded volatility. Now that you've added additional rate cuts into market pricing, I think that that's just become even more acute. So strategists and the market are starting to kind of adjust, I think, not only their expectation for valuation, but also the timing of that valuation. I think you could argue that the second half, could look actually fairly bullish if the Fed gets a couple of hikes off and then inflation decelerates in the second half at the rate we expect. So I think kind of what you're seeing here is a moving around of not only the level of valuation in the forecast, but also the timing and when people expect these things to happen. But certainly our work has shown, considerable downside risk, particularly to valuation in NASDAQ and the tech sector. And I don't think there's any reason to assume that wouldn't apply to other markets as well.
Pete, just your thoughts on that as well, how you'd have to adjust your call on multiples given how much more we've priced into this Fed curve.
Yeah, no, I think 17 times on the S&P makes a lot of sense to me in a 7 hike environment. Could even be lower. And what happens to earnings? Well, one of the reasons why we've been cautious since late last year, and especially on small caps, is because we thought that guides would worsen. When you have producer prices as high as they are relative to consumer prices, it's difficult for smaller companies in particular to pass that along through to their customers. And so, we have that dynamic going on for smaller companies and the duration dynamic going on for larger tech companies that have really been sustaining the rally for so long. So I think it's kind of a double whammy, whether you're looking at small caps or large caps. I think the headwinds are there no matter how you slice it.
Oksana, just to turn to you, some of the work Goldman did in this report over the weekend was actually pretty interesting, just on what happens to equities when growth decelerates and real yields rise. How does credit respond? Typically, what does fixed income look like in a backdrop, with a backdrop, where growth decelerates and real yields pick up?
Not a happy combination for credit, but I do actually want to make a comment as well, just broadly on the market before we come back to credit. I think it's important to remember what the technicals in this market look like. We have a generation of investors now across the board, equities and fixed income, that only know a market where the Fed reverses every single sell-off. 10 million people, I believe, opened a brokerage account for the first time during the pandemic. Something like 41% of U.S. household financial assets are now in the stock market. And the same if we cross over to bonds, right? We have a whole generation of investors that really have never had to deal with a market that does anything but go up in terms of returns. So these are all really important technical pressures to keep in mind, as well as the fact that, there's a lot of talk about the flatness of the curve between the midpoint and the 10-year. And that is definitely true. But also, let's not forget that between the Fed funds rate and 2s right now, the last time we had a spread this wide was mid-2004, and it was followed by something like 15 to 17 hikes consecutively. So we really are in uncharted territory here. And whether we have a continuation of these rising rates or whether we have something that is causing, spread risk to widen, which so far returns have been really driven by interest rate risk. Even if you look at high yield, that has been down year to date. What has led it on the downside? The highest quality of that, the highest quality part of that market. Double Bs are down significantly more than triple Cs. So this is not a fundamental story right now. And I predict that it's not going to be for a while. This is not going to be a year where fundamentals necessarily matter, particularly in the first half. It's going to be, easy gains of 21, may be taken away very easily as all tide that lifted all boats may now, crash them, so to speak. But fundamentals are important to watch, but I think high correlations across a variety of sectors are much more important. Technicals are much more important, and it is really crucial to have that liquidity in portfolios.
Oksana, difficult to answer this with a yes or no. You can expand on it a little bit later, but if you can, yes or no, are you expecting a repeat of Q4 18?
I think closer to a yes than a no. Yes.
We'll pick up on that. Oksana Aronoff alongside Peter Cecchini and Stuart Kaiser. Coming up on the programme, the morning calls, and later, equities recover this morning. As it seems the tone has softened just a little bit, relatively speaking. over in Ukraine and Russia. We can talk about that through the program. From New York City this morning, good morning. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Five minutes away from the opening bell, 2 words, all right. That's all it took, the Russian president, just to say, all right, in a response to his foreign minister proposing further diplomatic talks with the West. All right, enough to lift this equity market as well. Just negative 0.1%, turning around, reversing earlier losses on the S&P 500. We were down by more than 1 full percentage point. Switch at the board and get to the bond market. We turn around there as well at the front end, very much so. Up 9 basis points on twos, pushing 160. On twos right now, 158.46. That's the bond market, the price action. Here are the morning calls. JP Morgan upgrading Goodyear Tire to overweight, $23 price target. The analyst highlighting an attractive valuation with deep value for patient investors. We're up there by almost 4%. Wedbush upgrading Micron to outperform, 120 price target, growing more optimistic about pricing amid increasing demand, up there by 1.6%. And Jefferies finally downgrading JP Morgan to a hold, warning about increasing competition for loans and deposits. That stock down by 6 or 0.7%. Coming up, geopolitical tensions front and center. Your equity market recovers going into the opening bell. The cash open is up next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I came in early this morning. The market was down about 1%. We turn around off the back of headlines out of Russia. Futures now down just 0.1%. On the Russell, we're positive by 0.25%. On the Nasdaq, we're negative just 0.25%. A big turnaround off the back of some headlines out of Moscow. Would it stick? There's the opening bell, switch on the board and get to the bond market. Almost 190 at the lows on 10s. Then we bounce back towards 198.58. Yields were coming down. Now they're rising again, up 5 basis points, closing in on 2%. On twos, a big turnaround there too. If you look at a 2-year yield, we are higher at the front end by 9 basis points now. 159, round it up to 160. We're getting back to levels we pushed through last week, Thursday into Friday morning. In the FX market, euro dollar 113.13, negative 1/3%, and crude backing away 6 or 7/10%, down about 60 cents to 92.47. As we open up this market, about 30 seconds in, we are down by almost 1/10% on the S&P 500, leaving behind some of the drama of the second half of Friday's session and earlier this morning. Energy, bottom of the pile, down 0.6%. Utilities, staples, defensive here, top of the pile. That's where the outperformance is at 0.4%. Breaking down some of the numbers in this market, about a minute in. Let's get to Abby for more. Hey, Abby.
Hey, John. Well, on all of these shifting headlines around Russia-Ukraine tensions, lots of volatility beneath the surface as well. In fact, big turnarounds both to the upside and the downside, turning higher the airlines earlier when there was a lot of pressure around the Russia-Ukraine tensions. Airlines down more than 2%. Now some of the big airlines up more than 1%. On the other hand, last week as these tensions escalated, big oil had rallied in a big way. Now oil down, also supporting the idea that the pressure is decreasing. Also on airlines, interesting, there was a headline not so long ago that unruly travelers are pushing airlines and the U.S. government toward a no-fly list. Perhaps that is a part of the gains as well. As for defense contractors, they had been higher earlier, now off of the lows, but nonetheless lower. So that suggests that investors are a little bit more optimistic about those geopolitical tensions. Where investors remain unoptimistic, John, big tech, Apple and Amazon lower. Of course, rates are higher. And Bullard was not so long ago reiterating a hawkish view. So, of course, those big tech names are dragging on the equity indexes, John.
Abby, thank you. Been itching to get back to Oksana Aronoff on her comments about 10 minutes ago on whether we could get a repeat of Q4 2018. Oksana, let me come back to you. You've got more time now, as much time as you like. Do you see a flavor of it, something close to it? What are you looking for here?
Are we talking equities or credit?
We're talking credit. We're talking credit, and I think if I remember correctly, it was about 100 basis points of spread widening in a blink of an eye in Q4 18. No issuance in the primary market from high yield. It was a really rough time. Are you looking for that?
Well, we're already halfway there, are we not? We're already halfway there, and we haven't really begun to feel the pain of any Fed hikes yet. We haven't really begun to feel the pain of any fundamental issues associated with higher borrowing costs, which of course are most important to these lowest quality borrowers. We haven't really begun to feel the pain from any geopolitical, risk coming to fruition. Right now, they are simply risks. So there are a lot of unknowns out there. So absolutely, we could get there and then some very quickly. One of the big, and you and I have talked about this at length over the years, one of the big differences in the market and credit market today is the absence of street liquidity, which has been more than amply fulfilled by Fed liquidity. But with the Fed liquidity going away, you really do not have a shock absorption mechanism in this market, which is why you can experience, what can feel like recessionary price movements without even an actual recession. We saw that in 2018. We saw that in 2015, 2016 with parts of the market that had nothing to do with oil that was really experiencing the brunt of the issues, right? So this market is on precarious footing from a liquidity standpoint. So absolutely, we can get there and then some.
Oksana, when you think about coming out of cash again then, the indicators from the previous cycle, I assume, are different this time around, given that you believe the durability of the Fed put has shifted. I think we can all agree on that to some extent, to some degree. Oksana, what would encourage you back in? What are the conditions that you'd look for to redeploy that cash?
At least a positive real return for areas of the market like high yield. And we are not even there yet with these most speculative parts of the market, right? So that, I think, is benchmark number one, if you will. And then absolutely, we could go 200 wider from here, and that would be an interesting level to start getting involved. But ultimately, of course, it's all dependent on how do valuations, fundamentals, and technicals line up. If we continue to see an increase or continue to see an acceleration to the inflation number, that plank is going to move higher. If we can start to see a deceleration to that number, we will readjust accordingly. But right now, this is definitely not a point in time where valuations or technicals or fundamentals look right to get involved here.
And Peter Cecchini, just plug that in to your equity story. Let's just imagine that Oksana's world is the world that materializes. We could be 200 basis points wider here in credit. What would that mean to you?
Well, her world is our world, and I was just kind of curious if we were somehow reading off the same script. Look, we've already seen high yield CDX, for example, go from 109 to 105.5. And John, I'm going to put your question off for a second because I wanted to build on something she said in the last segment, which is to say we are not only looking at technical factors relative to central bank policy, but the Fed is at the end of a 40-year secular trend to the zero bound. And not only does it have that secular zero bound termination, if you will, but it's also got a cyclical problem, which is inflation, and it's 5% behind on its typical prescription for rate hikes, the Taylor rule. And so it really is between this rock and hard place, which is going to make the Fed saving the day very, very difficult and makes, I think, equities most vulnerable because of that dynamic, which is a generation of investors has come to expect the Fed to save the day. And the last point to make there is, not only is the Fed in this very precarious position, but the fiscal stimulus, $6 trillion of it, has largely worked its way through the system. And we can see that through personal savings. We can see that through the Treasury General account. So both fiscal policy as well as monetary policy are now somewhat on the sidelines. And really what we need is organic growth, which I think the transition towards organic growth in this inflationary environment is going to be very, very difficult. So that is not a great setup for risk, whether it's high yield credit in the traditional sense, corporate credit, or equities. There are areas of the market that are interesting. Collateralized cash flowing assets for us are the place to be. And we think there are going to be opportunities there a little bit later in the year to take advantage of the environment.
Stuart, you've been listening to this through the last couple of minutes. Your response, please, your reaction.
My reaction to the look, I don't know that I have a good reaction. There's a lot of information there, Jonathan. I think our view here is there are still significant downside risks to valuation if you get the continued kind of repricing and hawkish expectations of the Fed. And, that's probably most acute in tech. In terms of opportunities, I think the area we've seen clients most recently engaged in is services spending. So there's, the view that both economic growth and inflation will kind of transfer from good spending into services, and I think we've seen a lot of traction in terms of investors trying to go in that direction. So I think big picture, we've had a lot of de-risking. You can see that in the amount of put open interest in the market, and folks that are invested, I think to Peter's point in the previous section, were that a lot of stock picking, a lot of single stock and single credit analysis being done, and a lot of focus on themes such as services spending that investors hope is a little bit insulated from the macro headwinds that we're facing.
A ton of earnings too. 80% of the S&P 500 earnings story is in. Let's get to Kaylee for more. Hey, Kaylee.
Hey, John. Yeah, we're in the waning days of earnings season now. About 360 companies in the S&P 500 have reported, and by and large, they've been beating expectations to the tune of about 6% on EPS, only about 3% for sales. But where growth has stacked up so far is near 27%. That is a lot better than analysts had expected before earnings season started. A month ago today, when JP Morgan kicked things off, estimates were for 21% growth, and they've been continually ratcheted up as we've moved through the season. Of course, it isn't over yet, though, John. We still have about 140 reports to get through, and it's retailers that are going to be in the spotlight over the coming days. It starts with Walmart, which will report on Thursday, then Home Depot, Macy's, Lowe's, TJX, all reporting next week. Target will round things out the week following, and a key focus for this quarter, as it was last quarter, will be on margins. Costs for these companies have been going up due to supply-side challenges, from freight to labor, all of that costing more money, and they aren't necessarily passing all of that on to the consumer, because these players, if you exercise too much pricing power, you could risk ceding ground to competitors, especially with wage growth in the U.S. not keeping pace with inflation. Consumers may be getting less tolerant of those higher prices, a little bit pickier about how and where they shop. So that could weigh on the profitability of these companies as we get their reports in the next weeks or so.
Kelly Lyons, thank you. Let's stay on the margin story just briefly. David Costin at Goldman Sachs dropped his forecast. We talked about that earlier. They go from 5,100 to 4,900. This is on valuations and not earnings. What's going to drive earnings, though? Sales growth or margins? They say sales growth, revenue growth, and not margins. And that's what I want to come to you on, Stuart Kaiser. Just your margins call for this year, for the S&P, your thoughts around that story and how it played out in 21, and whether that gives you any clues on how things play out in 22.
Well, I think fourth quarter earnings sort of followed that path, Jonathan. We saw a larger beat in revenue expectations than we might have expected, and probably a little bit lower of a beat on the margin side. So, that played out in 4Q, and it seems like the setup for 1Q is similar. The street has not taken up numbers yet, and the mix of revenue versus margin is obviously going to kind of be a key focus of that earnings season as well. So, I wouldn't disagree with it. I think that's how we finished last year, and it does seem that that's like the direction we're going to go in to start this year. How tolerant the market, investors will be to kind of, pressure on margins, we'll see. But it strikes me that is not generally the mix of earnings growth that investors are looking for.
Pete, I want to come to you on the same question if I can.
Yeah, no, we're taking a little bit of a different view here, Jonathan. From the perspective that input costs have continued to rise, and that commodity prices have done the same, with geopolitical tensions obviously not helping. We've seen, aluminum above 3,000 for some time now, nickel, oil, you name it. Lumber is back up above $1,200 per thousand board foot. So I don't see it abating anytime soon. And I think, importantly, the idea that companies can pass through those costs to consumers, I think it's misplaced over the longer term. And while companies have been beating expectations, it's really important to look at guidance. And Bloomberg actually has a great function for that. And net revisions on guidance have been as negative as they have been since 2015. And I think that's mostly on price and on margins, based on the transcripts that we've poured over.
Pete, always going to catch up. Peter Cicchini and Stuart Kaiser, and to the wonderful Oksana Aronoff on this fixed income market with some scary thoughts to get your head around for credit, maybe in the not too distant future. In the bond market right now, very close to 160 on twos. Yields picking up by 9 basis points to 159.90 at the highs, 159.28 right now. We'll keep an eye on that. Coming up, Wall Street getting back to work as Democrats continue pushing their agenda.
The number of hospitalizations is still very high. The number of cases is still very, very high, but it is going down quickly.
An update from DC in just a moment.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
The number of hospitalizations is still very high. The number of cases is still very, very high. But it is going down quickly. So I think in a few weeks, hopefully, we'll be in a much, much better place. And I think that, as those cases and hospitalizations go down, we'll be able to do more and more.
The US workforce returning to Wall Street amid declining virus cases, a stark contrast to Hong Kong. The hospital's authority chief manager saying the following: the number of confirmed patients has been growing rapidly and by multiples over the past 2 days. The emergency wards at different public hospitals have been severely overloaded. This, of course, will have consequences for the global economy, a multi-speed global economy right now. Mike McKee, good morning to you.
Good morning, John. Yeah, it's why we can't get over this pandemic around the world, because new hotspots keep popping up. At least this is still the Omicron variant as far as we know in Hong Kong, but over 2,000 cases a day now in the former British colony, and that has taxed the hospital system, as you mentioned, 90% occupancy in their ICU units. They're not the only ones. South Korea is now going to be offering a 4th shot to immunocompromised patients in the hope of keeping down an outbreak there. And anti-vaccine protests have broken out in Wellington, New Zealand, similar to the ones we saw in Canada last week. Now, the Canadian one is over. They have cleared the last protesters off that Ambassador Bridge that goes between Detroit and Windsor. That is good news. It carries over a couple $100 million a day in trade back and forth between the two economies. So having that back open is good news for the overall economy. Here in New York, you might have noticed that some mask mandates and things changed late last week, over the weekend. Now we see Goldman Sachs and JP Morgan have dropped their mask mandates amid an easing in the COVID regulations, trying to get people back to work. A lot of the city's top financial firms starting the great return. City workers due back today. JP Morgan, Goldman, Bank of America in progress. Amex setting a March 1st date. Wells says they'll come back in mid-March, and you can see the rise from a big drop to about 25% now. Back to work in New York. That's still obviously quite low, and we've got to get that up higher to help the New York City economy recover.
There's going to be a massive push on Wall Street. Mike McKee, thank you. Thank you very much. I want to turn to Bloomberg's Joe Matthew down in D.C. for some of this and to talk about policy too. Joe, can we just start with the shift we've seen in blue states over the last couple of weeks? I've had the conversation, I'm sure you have too. Is it driven by politics or is it driven by the science?
Maybe something in between, Jonathan. It is interesting to see that these Democratic-led states, these northeastern states, get ahead of the White House on this, whether you're talking about Connecticut or even in Virginia, Purple Virginia, where this has been a much more controversial matter with school districts suing to maintain mask mandates here. But it's interesting, Jonathan, it comes up at the White House, and you and I have talked about this before. The White House is a step behind on this because the CDC is suggesting, of course, that we continue these mask mandates. So states seem to be going off on their own here, and maybe in the next couple of months, we're going to find ourselves in a world where this is micro-local, not just state governments, but county and town and city governments making these decisions.
Hey, Joe, let's get to policy quickly. Senator Joe Manchin saying this, quote, "The most important thing we have to deal with is our fiscal responsibilities and a financial position in our country." Joe, that does not sound like a senator who's about to agree to a big spending plan anytime soon.
Well, I think that's true. Look, when that inflation report, when the CPI report came out last week, Jonathan, he issued a statement and went even further to say, we all have a responsibility to do all that is possible to roll back inflation. It's an obsession for him. It has been before. It was for everyone else here in Washington, D.C. And as they consider maybe a smaller, more palatable version of Build Back Better, I would point you to the debate on the budget that's going on right now as we try to play a little bit of small ball here this year after the big comprehensive bills occupied our attention last year. There's an omnibus budget that's being carved out right now. They're debating it right now, and it could be a vehicle for some of the smaller, more popular items, say an expanded child tax credit that never happened under Build Back Better. It's an opportunity here for Democrats, knowing that as we look down the road here and look at the calendar, this is a midterm election year, Jonathan. The longer we wait, the harder it will be for Democrats to pass anything ambitious.
Joe, just quickly, if we got some clarity from Senator Manchin on what he would agree to, what elements of that package that he would vote for?
We know that the pre-K, for instance, a universal pre-K program would be important. We know that certain elements of the climate change provisions in Build Back Better would be important if they don't run across the coal industry in his own state. The fact of the matter is, though, he has shown no appetite for spending, and there's also the matter of Kyrsten Sinema, the senator from Arizona, who's not looking for the tax increases. One of the ideas being reported now, the White House suggesting that they maintain the tax component but have a much smaller price tag, so this becomes a deficit reduction tool. We'll see, Jonathan, if that helps to turn anybody around.
Joe, thank you, sir. Joe Matthew down in D.C. We appreciate it, as always. Just to pick up on what's happening in this bond market, on Thursday, we had this massive move of more than 20 basis points. Briefly breached 160, high at a session 163.58. Then on Friday, it carried through until the latter half of the session where we started to worry about Ukraine, Russia, and all things associated with it. Yields gapped lower, break of 150 at the close on Friday. Continued that story for a brief moment this Monday, and then we got that line out of Russia. That line out of Russia from the Russian president who just said all right to a proposal by the foreign minister, Sergei Lavrov, to leave the door open to more conversations around the diplomatic route. And that just unlocked high yields again. Bang, up 10 basis points and back through 160 at the front end on twos. That's what I've got my eye on through the morning. We'll be looking at the sector price action now in this equity market about 22 minutes in. We can do that with Kriti Gupta. Hey, Kriti.
Well, good morning, John. You are seeing a little bit of pressure in the broader index, the S&P 500, just dipping into the red here. But there is some green on the screen underneath the hood. A lot of that has to come from that tech space. You were just mentioning those yields. Well, think about it. Yields and tech now have that positive correlation, a little bit of that defensive tilt coming back into the market. Once again, tech also serving as that inflation hedge. Towards the bottom, though, you do have energy, consumer staples, healthcare, a lot of the sectors that were actually in the green last week, well, they are down this Monday morning. Somewhere in the middle, you have industrials, which really holds a lot of your defense names. This is a sector you want to keep an eye on. As we talk about geopolitical risk, Lockheed Martin, Boeing, these are the names that are going to catch a little bit of a hit. Lockheed Martin actually having some news of its own this morning, ending its bid to buy Aerojet Rocketdyne after the FTC sued to block the $4.4 billion deal on competition concerns. So once again, aerospace, industrials, that's the sector you want to watch, John.
Kriti, thank you very much. Your equity market just about positive then on the S&P. Quickly breaking down the sector price action for you on the Nasdaq, up 0.6%. That was not the story just a few hours ago. Up next, your trading diary. Busy week still ahead from New York. This is Bloomberg.
Capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
From New York City.
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story. How are you thinking about those dynamics?
I have to say, given the negative momentum out of Friday into Monday and over the weekend, up 0.03% feels like a big update right now. Just a few hours ago, deeply negative. Then we turned around off the back of those comments from the Russian President Vladimir Putin in response to his foreign minister about a proposal to continue those talks on the foreign policy effort, just to keep things diplomatic for now. Equities up by about 0.9% on a Russell on the Nasdaq, up 0.6%. On a two-year yield, up a whole lot more from where we were earlier this morning, that's for sure. Breaker 160 again, up 10 basis points, a lift of 5 basis points on 10s, and that curve, the spread between 2s and 10s, flatter, compresses even more. That's the price action. Here's your trading diary, what to look for. President Lagarde addressing Parliament, 11:15 Eastern. Host of economic data through the week, PPI on Tuesday, retail sales and Fed minutes on Wednesday. Jobless claims on Thursday, and a busy slate of Fed speak throughout the week. Mester, Evans, Williams, Kashkari, all on the docket. From New York City, for our audience worldwide, thank you for choosing Bloomberg TV. This was the Countdown to the Open. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complications due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning 1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack at the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be a ploy by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker, but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venagold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venagold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venagold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venagold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves.